Do, right? Guys, welcome to the classroom. Welcome to education. I'm excited about today. I may have had just a little too much coffee, fair warning. So if I go too fast, slow me down. Woke up in a fantastic mood, feeling great. And I'm excited about the day. I've done some revisions on the education just to try to make things even easier. And that's really the goal. If you are brand new with me, Blue Pearl, I know that you're new with me. Welcome to the room. Just a heads up on the way we do things. Simplicity is what it's all about. We dedicate an entire hour to trying to keep things as basic, as simple, and as focused as possible. We talk about one trade. We talk about 3 rules. We only use 2 charts. And we break each step down individually. And the goal is that you kind of learn things in a step-by-step basis instead of just trying to jump in and be a trader. So if you're overwhelmed on day 1, if you're a little confused on day 10, it's okay. This classroom is a discussion, and I encourage you guys to raise your hand, to ask a question, really put me on the spot. Make me provide you whatever clarity you need. I have broken every rule. I have made every mistake. If it can be messed up, I've done it. But the cool thing is I've learned how to fix it. And that's exactly what I'm going to help you guys with if you need it. Every morning, I go to the calendar, forexfactory.com/calendar, and I'm just looking for news. And I want to see these releases. And today at 8 a.m., at 8:30, good morning, Miss Cindy. We had some high impact news, which is red boxes, and that's what I'm looking for. I'm looking for these red boxes because it can create a pretty good spike. It can change directions, and it really takes away the advantage of the pattern seeking that I'm doing. Guys, today is FOMC day. FOMC is when the Fed comes out, says some stuff, and people freak out, and the market is like a seismograph, sometimes for hours. Leading up to this announcement at 2 p.m., very often there's a lot of jockeying for position, people trying to put themselves in the best spot to get in for this reaction. I personally tend to, I hate to admit this, I always try to trade FOMC and I always lose at least $2,000. So today, I got in early, took my trade, and I'm going sim. I'm going to watch it, I'm going to play, we're going to have fun and look for patterns. But I'm very aware that things can go a little sideways at 2 o'clock. And then at 10:30 a.m., we've got crude oil inventories. Guys, I teach on crude oil, I teach on the S&P, and at 10:30 a.m., they're going to release the barrel counts or something like that. And again, very deep pocket investors tend to react. So I make the choice each and every morning. If I see an orange box or a red box, I simply sit out and do nothing. Uh-oh. Anna, I hope they're all right. I hope they got out of there. Yikes. Yikes, yikes, yikes. They're good? Awesome. That's scary. Wildfires are terrifying. When we went to Canada last year, year before last, the mountains were on fire. And it's absolutely terrifying to see those fires. So I'm glad they're okay. Definitely. Thoughts and prayers. As everything that I talk about every day comes from the Nexgen website. We have gone to very great lengths to make sure that you have everything that you need to be successful with the software. Every answer to every question, honestly, can probably be found here. 99% of what I teach every morning, you're going to find in the trading guide. And the trading guide has all the rules. It has the next step beyond the rules. But there's one thing that we talk about every day, each and every morning. Guys, this is your foundation that we're building. And I do the same thing every morning. And I dropped in a little note this morning because what I do when I don't have trades to take is I start looking for smart stuff on the internet. And the reason I say the same thing every morning, the reason we reinforce these rules, these looks, these advantages each and every morning, because repetition is crucial for learning because it reinforces information in the brain. making it easier to recall by creating stronger neural connections through repeated exposure, ultimately leading to better long-term memory retention and mastery of new concepts or skills. That's not me being smart. That's the Google webs telling me that. But guys, this is what we do. We talk about the same thing the first hour every day because this same thing is your huge foundation. Guys, this is the basis for most everything you do. And you can build that foundation through one trade initially. Don't give yourself the burden of looking for every trade. Let's look for the best trade. We're going to look for the high probability trade. Because a high probability trade is defined when each indicator on every chart agrees for the trade. Guys, this is the best of the best. This is the highest probability. This is when the triggers are their strongest. No termination conditions exist. There's really nothing between you and your target. This is a trade that typically wins 70 to 80% of the time when you follow the rules. This is a trade that creates an awful lot of confidence through that memory of success. And guys, most importantly, and I will never undersell this one, this is the trade that teaches you to read your charts. And chart reading is 90% of your day. Chart reading is what we do to decide that it's time to take a trade. So chart reading is looking at your indicators and seeing those advantages and then choosing to take the trade because you have a statistical advantage. Everything the market does is patterns. Everything the market does repeats itself. And you will literally see the same thing over and over and over. And what you can do is study that pattern and then take advantage of that pattern, guys. 90% of your day is reading indicators. 10% of your day is actually being active in the market and trading. I looked at my trade report this morning. I am in the market on the average winning trade for just over a minute. A minute and 3 seconds is my average. And my average loser takes about 40 seconds. Guys, that's not a lot of activity. And my average winner is over $300. So $300 an hour, guys. I'm practically a high-priced lawyer. Once you learn these very basic concepts, once you understand this high probability trend trade, guys, you're going to understand where the market is likely to continue. This becomes your entry point. This becomes the spot where you get into the market with all those advantages. You will understand where the market is likely to go. This is going to help you with intelligent choices on profits. This is going to keep you from trying to hold on forever when your indicators tell you that it's time to exit that trade and get paid. And then finally, you're going to understand where the market is likely to stop. And these are termination conditions. And a termination condition, guys, this is this giant red flag. It's a bullhorn in your face saying, hey, don't take that next trade. This is where the people in charge are making decisions, guys. So this is what we're going to focus on this morning. And we're going to do it with only 3 rules. So if you're newer with me and you're like, man, let me check out this software. Let me see what's going on. We break it down into 3 rules for a reason, because each rule for this high probability trend trade translates to an advantage when it's true. So rule number 1 says strong trigger lines. That's going to give me the advantage of momentum. And when I talk about that advantage of momentum, I'm talking about a market that's most likely to continue in the direction of the trend. Momentum is what it takes to break these key areas that you're going to see on your charts. And guys, momentum even covers a lot of the mistakes that new users tend to make. So we focus on momentum first. This is rule number 1, and you're going to see it in the room. There's people who have entire trading plans that revolve around this momentum. Rule number 2 says termination conditions false. Room to profit targets true. Nothing in the way that could create a bounce that could reverse the market that could stop you. And it's literally a clear path. When you understand the concept of momentum and clear path, you have everything you need to build a trading plan that is consistent and profitable. And I will stand behind that statement 100%. These 2 are your foundation. These 2 are your core. And in some shape or form, momentum and clear path works its way into every trade that I see people take with the software. So I'm going to encourage you, don't worry about everything. Worry about the best things. Let's focus on momentum and clear path. And then for the high probability trend trade, rule number 3 is unique. It is the entry area. It's the point where the market is most likely to continue, guys. And the precision that you're going to have to get into these trades, it almost seems unbelievable in the beginning, but with a little bit of practice, you're going to realize that it does in fact work. And even more so, with a little more practice, you're going to learn to trust it to the point to where when you have momentum, when that path is clear and you see that entry area, wild horses couldn't drag you away from your high probability trend trade entry. These 3 rules happen on only 2 charts. Simplicity, keep it basic. Don't outsmart yourself. More specifically, on this first chart, the large chart, most current bar, it's going to give you all the information you need to look for an entry. Your large chart is a very slow moving chart. It's a broad stroke of a brush. It really gives the overall opinion of the market, and it will define direction, meaning that the large chart's going to tell you whether you're looking for rules to be met for long trades or short trades. And that's a beauty here. We can make money both directions. Large chart is going to define the momentum in the market and whether or not rule number 1 is met. And large chart will define the areas, these Fibonacci areas, because these are the areas where the large crowd, where the people that move the market are making decisions. And the large chart will let you know whether or not you have that clear path. Once the rules are met on the large chart, that's when you turn your attention to the small chart. And it's definitely an order of operations, guys. Your small chart refines that 1 bar on the large chart. It shows you the inner workings in the form of maybe 15 to 30 bars. And you're going to use that refinement process to pinpoint your entries, to reduce your risk, to maximize your profit potential. So in the beginning, rule number 3 is just an entry rule. And this small chart is nothing more than an entry chart. We're always going to let the large chart lead the way because the large chart, I love this analogy, is the large crowd. These are the men and women with deep pockets, with a lot of influence. People invite them to parties, guys. The large crowd defines the direction. When they wake up and they say, hey, let's make the market go up, the market goes up. And when they get excited, they produce the momentum. And then when they reach one of those key areas, they make decisions. The big crowd buyers and sellers, they enter, they exit, they fight right at those key areas. And you're going to know where they're most likely to do that. There is a small crowd. And the small crowd has a lot of money, more than you or I. And they fight the trend, they fight the momentum, they fight the direction, all of these things, and they create these little pushes, these little retracements. And they typically fail 70 to 80% of the time, which means that when we trade with the large crowd, when we trade with momentum, when we trade with direction, when our path is clear, rule number 3 has us pinpointing almost exactly where that small crowd is most likely to fail. And if this is where we're entering and they fail 70 to 80% of the time, it puts us in a position to have the potential to win 70 to 80% of the time, guys. So I'm going to encourage you, keep it very basic in the beginning, keep it very focused. Let's learn the trigger line and Fibonacci rules for when it's okay to trade. I want you to teach yourself that the only time I need to be active in this market is when I have the advantages in place, when I have momentum, when I have a clear path, and only if I have that entry rule. You guys can simulate. So you have zero risk to learn this software. You have zero financial risk. The only thing you're investing right now is a little bit of time. Good morning, Gary. Sorry, I missed that. You have a working set of the software. You have a platform to run it on. I'm going to give you the rules. I'm going to show them to you. I'm even going to give you a plan. I want you to practice. I want you to simulate. But the most important thing that you can do, and this is the first step in becoming a confident trader, is post in the room. You'll notice in the chat box that there's a lot of these screencast links. And what this is this is somebody posting in the room saying, hey, Mark, check it out. This is what I saw, and this is what it was, and these are my rules, and this is where I got in, and this is where I got out, and this is exactly my plan, Mark. Hold me accountable. Is there anything that I could have done better? Is there anything that I could have noticed that might have been problematic? And of course, not on this one. Marty took the perfect trade. Every time you post in this room, it's a private session. And it's such a common thing. When I hear people say, man, I've been getting my ass kicked, Mark. I have been getting mopped up for the last 30 days. And I always ask, why aren't you in my room? Why aren't you sharing? Why aren't you giving me the opportunity to help? Guys, I have broken everything and I know how to fix it. So all I need from you is some visual. Let's see what you're doing because we can fix everything. And then finally, we're going to simplify. We're going to focus on this high probability trend trade. We're going to talk about 3 rules on 2 charts, guys. The only thing you need to learn is what looks you'll commit to. And that look is the pattern when the rules are met. You've got to learn it so that it becomes easy. And that's the second piece of becoming a confident trader ASAP. I'm going to give you guys this spreadsheet. You got it when you downloaded the software, guys. This has been a part of the Nexgen curriculum for as long as I've been a part of Nexgen. I have modified it a little bit to make the study process easier. Your first page is a trade tracking sheet. That's all it is. It's a trade journal. Dear Diary, today I took a trend trade short. Everything was great. And the feedback from class was this was the perfect entry. Don't you dare miss this one next time. And that's great. But what you're really going to use this for is maybe the trades that didn't work out, where a mistake was made, where there could have been less risk or higher profits. And you're going to get that feedback each and every morning. Every time you post in the room, we're going to talk about the good and the bad. And guys, I am very keen on celebrating victories, but I will always go back to momentum, path, and entry. So what I need you to do is talk about momentum, path, and entry every time you post so that you can come back and study it, because each and every morning you're going to go back and look at these trades that you took and you're going to ask yourself what worked and what didn't work. What kept me relaxed and what made me nervous, guys? And what happens is this little historical study each morning, it sets you up for the day. It keeps you focused on the things that are going well. And it keeps you focused on avoiding the things that are taking your success from you. And my promise to you is that if you post it in the room, you will get the feedback and you will get a plan for fixing whatever ails you. The second page, this is the basic rules. So we break down the rules individually. This is strong trigger lines. Rule number 1 in the green, and I've given you over 50 examples of what it looks like to have strong trigger lines, what it means to have a clear path, and even what your entry should look like. And then I've also put in here, and I've given you a great start on what it looks like to not have your rules met, because there's only 2 options, right? If my rules are met, I take the trade. If my rules aren't met, I sit on my hands and I wait for those advantages, because trading is a business and it's all about having a statistical advantage. There is the client trade section. This is where, honestly, I'm not proud of it, but I did it. I steal your pictures. When you post in the room, and it is the perfect trend trade. Guys, I liberate it from the room and I put it into this spreadsheet and create a study guide for all the new people that are coming in behind you. I've got the high probability trend trade entry sequence for long and short. I've got management ideas. I've got patterns that repeat themselves, because once you're a chart reader, once you're like, man, look at that momentum, that path is clear, there's my entry, holy crap, this is easy, other stuff begins to jump off the page. You start to see things that build your trading plan, that make you a more confident, a more proficient trader. So your job is to go to the Build Your Plan tab. And every time your rules are met, take that picture, put it in here. That repetition creates recognition. You're going to learn to manage. You're going to begin to see things. Guys, the more pictures you take, the quicker you're going to get to where you want to be. And just to give you a little insight into my life, so far in 2025, I've taken 132 pictures. Guys, I took 2 weeks off. This is from the 6th. This is from Monday is when I really started snapping photos, guys. 132 pictures. I have not deviated or gotten away from the idea that taking pictures and getting feedback is the quickest way to get to where you want to be. It's been proven every day. Don't skip that step. Are there any questions before we get going? I know I've got new people in here, so I want to remind you real quick. Bum, bum, bum. All I have to do is put in like drinking and it shows up from a fire hose. Ladies and gentlemen, this picture is exactly what it feels like on day one. I know that. I've been on day one. It feels like a lot of information coming at you. It feels like too many things to piece together. So I really want you to keep it very, very focused in the beginning. I don't want you to think about taking a trade for your first couple days. I want you to really commit yourself. Let me understand momentum through strong triggers. This lesson takes most people about 12 minutes. And then you're going to spend a little more time on identifying termination conditions, and then you're going to go through the process of finding an entry. And what you will do is you will take these three concepts and piece them together to create that highest probability trend trade. So don't let yourself get overwhelmed. If it starts feeling like too much, take a deep breath. If you need clarification, just let me know. And the cool thing is, and I'm going to throw this out there, I say that a lot, the cool thing, because I think this stuff is cool, is it's your questions that create better lessons. It's your misunderstandings that create more understanding. And if you've been with me more than 2 days, you're going to see that in today's PowerPoint, because I've adjusted a few things based on the questions that I've gotten in the last week. But we always start with strong triggers, guys, because momentum is key. Momentum is such a driving force. And strong triggers comes from the large chart. Large chart leads the way. And the large chart also defines direction. The background color is going to let you know whether you're looking for long trades or short trades. If the background is green, the market is going up. If the background is red, it's going down. The highest chance of success comes from following the direction, trading with the direction. And the only way that you'll ever have strong triggers, guys, rule number one can be summed up in one picture. If my background is green and the trend is up, both my small triggers, these solid lines, and my large triggers, these dashed lines, well, they have to be green too. Because if they're not, I can't have strong triggers, because it's the crossing, the small triggers going above the large triggers, that paints this background green. And in order to have strong triggers, my small triggers must be up and above the large triggers. My large triggers have to be wide, angled in the direction of the trend, and it's the space. You can see where my laser pointer is. It's the space created between the small and large that lets me know that the odds are favorable for the market to continue up. And odds favorable momentum is what you're going to hear in class all day long. You're going to see it annotated on charts, OFM, odds favorable momentum, guys. Rule number one, that advantage of momentum, this is a universal look, no matter what chart you're on. If my background is red, my small triggers and my large triggers must both be red. And it's the space created between the two that lets me know the odds are favorable for the market to continue down. Odds favorable momentum can push a market in the direction of the trend, guys. Odds favorable momentum can break key areas. Odds favorable momentum can cover mistakes. And when I have strong triggers up, I'm looking to buy Fibonacci support on that smaller, faster chart. It looks like a tail on the large chart. Remember, large chart's a one-bar endeavor. You're going to be able to pinpoint precisely where that tail is most likely to form and get into the market in that highest probability trend trade. In a downtrend, we're going to sell Fibonacci resistance on that smaller, faster chart. You will be able to pinpoint where this tail is most likely to form, get into it with the least amount of risk and the highest profit potential. So, guys, strong triggers is strong triggers is strong triggers. The most current bar, smalls below the large are wide, the space is there. Can you give me a Y in the room? Just do me that favor if you see that this is in fact strong triggers. Guys, this is the best lesson I can give you, because once you commit to momentum, look how that market pushes. There's even one of those tails. That might have been an entry. Who knows? But momentum doesn't last forever. Momentum subsides, right? Just like anything. You take your foot off the accelerator, it's going to slow down. And when the small triggers work their way inside of the large triggers, this is what we call a weakening of the large triggers. And when I have those weakened large triggers, anything can happen up or down. This is where retracements tend to go a little deeper. This is where key areas tend to hold, guys. And momentum always leads the way. Weakness is a great opportunity to sit on your hands. Even the language inspires confidence. Strong, odds favorable, weak, anything can happen. And guys, during the course of the day, you're going to see both. So going left to right, you'll see the separation. The market pushes down. And guys, this is without the benefit of Fibonacci. Weakness, anything can happen triggers, is right where your reversal happens. There's one of those tails with momentum. Momentum subsides back to that anything can happen, and sure enough, another reversal. It creates momentum, another tail, and it rides down until we get into the transition period. I love the idea that the large crowd leads the way, that the large crowd creates fights. They create momentum, guys. And when the smalls are green, but the large are red, or the background's green and the triggers are red, you don't have that momentum. You don't have that agreement, and this is a transition phase. This is when the large crowds are fighting. The buyers and sellers are going after each other. Next-gen users, you don't ever have to get caught up in that consolidation. You don't have to be a part of that fight. This is our cue to go to the sidelines and wait for one side to win. Whether it's the buyers or the sellers, we don't care. We'll make money both directions, but eventually one of them wins, and they create that momentum that we're looking for. And guys, that's rule number one. That is the shortest lesson you're ever going to get. And if I open up the S&P, there's momentum to the upside. There's momentum to the downside, and it's a very universal look. There's weakness right at a fib, and that's where our reversal happened. And look how these lines tend to stop the market. Isn't that amazing? We know about these lines. We know right where they're at, and I'm about to give you a recipe to know when to respect them, because rule number 2 says termination conditions false, room to profit targets true. Guys, we will not trade into areas likely to stop the market because it takes away our statistical advantage. So what is a termination condition? It's an area. A termination condition is a Fibonacci-based indicator that has the potential to stop the market, that has the potential to create an untradeable bounce, that has the potential to reverse the market completely, guys. These are the lines that we're going to use. Divergence high lines. It's a magenta line. And this magenta line will print if there's a loss of momentum at that high pivot. You don't even see it until about 3 bars deep. So the formation of the magenta line is not a termination condition, but rather it becomes a line in the sand that may stop the market, so we're going to respect it. A divergence low line is the same thing from a low pivot. And the line itself isn't a termination condition, but it becomes a line in the sand that may behave as one. So we're going to pay attention every time the market approaches one. We have Fibonacci resistance, which is the red line that you'll see on your large chart. You're actually going to see these lines from 3 different time frames to increase accuracy. And when the market is trending up, this is a point where the market may stop, where it may reverse, where it may just bounce. There could be a fight. Fibonacci support has the same effect in the downtrend. When price reaches support, the market may stop, may bounce, or reverse completely. And then we're also using these yellow 1-to-1s. These yellow 1-to-1s, when the market is trending up, may behave as resistance. When the market is trending down, they may behave as support. These lines on a large chart are where the large crowd are making decisions, guys, where the buyers buy, where the sellers sell, where fights happen. So to identify a termination condition, we're going to allow price to reach the area. When I say price reaches an area, I mean these dynamic Renko bars. These are a representation of price. And when they smack into resistance, the only thing that you have to do is ask yourself, where are my triggers? The triggers will define whether or not you have a termination condition. If they remain below Fibonacci resistance when price reaches it, this is a termination condition. This is a line in the sand that may create a big untradeable bounce. It could create a fight and a lot of indecision. It could break, or it could reverse the market completely. If it reverses the market completely, it's a strong top. Guys, there are 4 possibilities when you reach that area and the triggers remain below. There's no reason to get caught in any of those scenarios. There's no reason to hope that it breaks, to wish that it'll reverse, to plan around a fight that may happen. It's okay to just sit on your hands and do nothing and wait for the reaction. If the reaction is a full reversal, those large triggers go from green to red, it's what we call a strong top. And a strong top is rule number one for about 3 different trades. A strong top sets you up for the highest probability trend trade short that you could ever take. Price bars continue down and they reach Fibonacci support. That is the first piece of the puzzle to identify a termination condition. When price reaches support, all you have to do, Nexgen users, is ask yourself, where are my triggers? If they remain above support, support is a termination condition. It could stop the market. It could create an untradeable bounce. There may be a fight there, or it could even reverse the market completely, giving it the I lost my train of thought. Making it a strong bottom. And a strong bottom is rule number one for about 3 trades going to the upside, and it sets you up for the highest probability trend trade that you could ever take. So, termination conditions are going to happen all day. Price reaches Fibonacci support. Triggers don't break. Look at the bounce. Weak triggers into that same area of support. That's where the reversal happened. Look at the momentum. There's a tail. We get to resistance, and it doesn't break. Back to support. It doesn't break. And guys, you know about these key areas long before the market ever gets there. All you need to do is study them a little bit and learn to respect them. So there is a life cycle when an area breaks. These are new slides for you. I hope these are helpful, guys. I love feedback when I do new stuff. I have 3 different scenarios, 1, 2, and 3. Number 1, price reaches resistance. Triggers are still below. This is a termination condition. Let's wait and see what the reaction is. Can you give me a why if this makes sense? This is every line you hit will be a termination condition for a second. As it progresses, if those small triggers, number 2, smash through the area with that odds favorable momentum, but your large triggers remain below the line. See how it's split 50-50? Guys, this area has the potential to break, but it has to be managed assertively because it's not yet a clear path. And then finally, when your small triggers and your large triggers get above resistance, well, now the area is broken. Now the path is clear. And that path will remain clear until the next area is reached, guys. This is what it looks like to have a clear path. And once broken resistance, it'll behave as support. Once resistance is broken, I worded that wrong, it will behave as support. So no trades, let's see what happens. Potential for a trade, let's manage assertively because the path isn't clear. The path is clear, let's look for those rules to be met and take that long trade. And the same thing happens short. Thanks, Mike. Price reaches support, and guys, it is always a termination condition if the triggers are above. There's no reason to try to predict what's going to happen because, do you guys remember that live market we just showed? Bing, bang, boom. More often than not, it's going to stop the market. But they will break. You'll have that first indication when the small triggers smash through the area, but the large triggers haven't quite made it through. You can take a trade here. It must be managed assertively. And once the small and large break below support, support behaves as resistance, the path is clear. Let's look for our rules to be met and take that high probability trend trade. And guys, this is it. And I know that it may feel like a lot on day one, but this is literally every scenario when you get to a fib. It's either a termination or a clear path or potential in the middle. Thank you. And there will be times, Blue Pearl, Nish, this is important that you guys understand this. Jay, even Cav and Ron, Iron Mike, there's going to be times when your path isn't clear because these damn lines are too close to one another. Because you have support after support after support. Because you have resistance after resistance after resistance. Guys, this is that 90%. This is that sitting on your hands doing nothing. And the futures markets trade an average of $220 billion hourly. $220 billion hourly. Trillions every day. Guys, it takes $400 a day to put yourself in a 6-figure scenario. $400, that's it. You don't have to be in every move. You don't have to hope areas break. You don't have to be the first one in or the last one out, guys. Focus on taking the best of the best. Get those advantages. That is everything I have on termination conditions. Are we good? We have momentum. We have a market that's likely to continue in the direction of the trend. We have no termination conditions. Guys, nothing to create a big old ugly bounce. Let's define an entry. And this is, I changed this one up too, guys. So NYC Pug, I had you in mind when I did this. So let me know if this helps. Rule number 3 is all about precision. Rule number 3 is going to put you into the market where the market is most likely to continue, where the trend is most likely to continue, where the small crowd is most likely to fail. Rule number 3 says that we're going to use a limit order to buy or sell a pullback at areas, fibs, mid-bands, and yellow 1-to-1s, but we want those areas to be inside of triggers. So what that looks like, and let me talk about the whys. Guys, this is your small chart. This is your entry chart. I took everything off but triggers and price bars. These are your 5-1 large triggers. You're going to use these, that separation, and say, hey, look at the momentum. Price may return to these large triggers. These are your 13-2 large triggers. We call them synthetic triggers. This retracement may return to those triggers. Your trigger lines are going to define the most likely zone for retracement. So from the highest point of the triggers to the lowest point of the triggers is where these price bars may go back to. That's it. That's all the triggers do for you. But when they're one on top of the other, we're going to call them favorable large triggers. Because look at how small the retracement zone is when they're one on top of the other. New users, this is how you're going to reduce risk and maximize profit potential. So the triggers define. Awesome. You're welcome, Nanda. The triggers define where the retracement is most likely to happen. It's the areas inside of those triggers, fibs, mid-bands, yellow 1-to-1s. These define where the market is most likely to bounce and continue with the trend, with the momentum, with the clear path. So the trigger lines tell me it might go somewhere between here and here. The areas inside say this is where it's most likely to bounce. This is where the precision comes in, guys. The more stacked the triggers are, the smaller this window becomes. The wider these triggers are, the bigger this window, the more risk that you're going to potentially have. So what we're going to do is we're going to define our entry. And we're going to do it by using this refinement process. And I thought I put the refinement picture in there. So let me show you what it looks like when the two charts are next to each other to give you an idea of why we're using this small chart. The large chart says down. The large chart has momentum. The large chart has the potential to break this divergence low. The large chart tells me with one bar that it's time to look for a trade. The inner workings of this bar, from the very bottom of the bar when we decide to take a trade to the very top of the bar, all of that happens in these bars on the small chart. It's the same box. 1 bar versus 20 bars. Remember when I said you'd be able to pinpoint where that tail is most likely to form? You're going to do it with an area inside of favorable large triggers. So to pinpoint, the market's going up, the trend is up, the momentum is up, the path is clear. And guys, it looks like this. That small chart will be screaming north. And you're going to have to fight that little fear of missing out. Good morning, Andy. You're going to wait for a reversal bar. A reversal bar signifies the beginning of the fight. The reversal bar, it signals the beginning of the pullback. The reversal bar is not your entry. The reversal bar sets you in motion to define your entry. So once the reversal bar prints, I'm going to look for my triggers, large and synthetic. And I'm going to draw a box around them because this range is where this retracement is most likely to go. It could go all the way to the very bottom. But it's the areas inside where I anticipate the bounce, most likely to create the bounce. So I'll create a window from the highest point of support to the lowest point of support inside of favorable large triggers. It's important that you use that language. inside of favorable large triggers. And this blue shaded area is precisely where the market is most likely to continue. Because of the momentum on the large chart, because of that clear path on the large chart, your job is to activate a limit order 2 ticks above that highest point of support and hope, wish, want, and pray that the small crowd gets there. And if they do, you're entering where the market is most likely to continue. The triggers define where the retracement is most likely to happen. The areas are like a brick wall and you're throwing a ball. That's where it's most likely to bounce. Anything beyond the triggers, anything on the wrong side of the triggers, anything below the triggers in a long trade, this is not where we want the market to go. 20 to 30% of the time, that small crowd is going to push through everything and get to the wrong side of the triggers. This is where your initial stop will be placed. This is where we're going to protect ourselves because this is where the advantage is gone. In a downtrend, small triggers are below the large triggers on the large chart. We have momentum. The path is clear. Everything is screaming down, and you guys are going to wait for this small chart to go up. It almost seems counterintuitive. This reversal bar signals the beginning of the pullback, the beginning of the small crowd fight. You need to find your triggers, large and synthetic. They define where the retracement is most likely to go. Find your area inside. Fibs midbands are yellow 1-to-1s, and guys, this is a magical moment where there's only one line inside of favorable large triggers. Your job is to activate a limit order, couple ticks below it, and wait for the small crowd to get there and put you into the highest probability trend trade you can take. Because you can define where the market is most likely to continue, you understand where the market should not go. It should not go beyond those areas, beyond those triggers. This is where your initial stop will be placed. Guys, this is your high probability trend trade. This is 3 rules. That's it. 3 rules on only 2 charts to put you into the highest probability trade that we can take. You've got to study it. You've got to learn to trust it. You've got to learn to believe in it. And guys, the more your faith in this methodology grows, the less stressful trading becomes. I know there's a lot of adrenaline associated with it. You will literally get to the point where you simply don't care about the result. You're going to be focused on the process because the process has been proven through your study to win more than it loses. So when you have momentum on the large chart, when you have a clear path or the potential to break on a large chart, go back historically, circle a tail. And if that tail lines up with an area inside of triggers, guys, this is your look. The easiest way to get to where you want to be and to get there quickly isn't necessarily taking trades in the beginning, it's taking pictures. So I've created this chart reading 101 because you've got to recognize momentum, you've got to understand clear path, and you got to be able to pinpoint your entry. This is going to get you where you want to be the absolute fastest, guys. And it's a little bit of that 4-letter word. It's a little work. Take 25 pictures of strong triggers. Put them into your spreadsheet. Take 25 pictures of weak triggers. Put them into your spreadsheet. Clear path, terminations, and entries. And guys, this is going to create that recognition through repetition. This is going to make it easy to understand that your rules are met. Most of you aren't going to do this, and you will continue to struggle with termination conditions. Most of you won't do this, and you'll wonder why the weak triggers didn't push the market. I'm telling you right now from experience, this is the fastest way to feel confident. But don't just take pictures. Talk about the whys. So every picture that I took and put into here, I didn't just throw a picture of triggers. I literally wrote out, I have strong triggers. The small are above the large, the triggers are up, the space lets me know that they're strong, I have the advantage of momentum. Rule number 1 is met. And guys, I promise you, if you do this, you're never going to make the mistake of trading against triggers or without momentum unless you choose to do that. So I'm going to give you this. And guys, it creates a connection. The typing creates a connection. I'm also going to give you guys the high probability trend trade checklist sheet. And this is, This is pictures of what it means to have your rules met. Strong bottom, strong tops. They're not mandatory, but they definitely create some warm fuzzies. Termination that reverses the market. There's your momentum. It's always your momentum. Up, down, doesn't matter. Separation means strength. Going in, termination conditions. It's either a termination, it is the potential to break, or it's broken. And those are your options each and every time. And then finally, there it is, what it looks like to enter short, what it looks like to enter long. And guys, this is it. You're just committing it to memory. And then the second page, sorry, I'm multitasking a little bit. The second page is really just a checklist for you to print out. The second page is designed 100% to print out, to laminate, to put onto your desktop and police yourself. These are also the things that you should write on every chart, every trade. Talk about momentum, talk about terminations, talk about whether or not price reached that area. And then finally, I'm going to give you a plan. Dun, dun, dun. That's the KISS plan, guys. And the KISS plan is really just a stepping stone in your learning journey. The KISS plan is designed to optimize your chances of success with the high probability trend trade. Guys, I've had people successful and funded inside of 30 days following nothing but the KISS plan, learning the rules, following them accurately, and taking the best of the best trades. It'll be through simulation, study, class feedback, and continuous practice, guys. This is when you're empowered to craft a plan tailored to your personal goals based on your experience reading the indicators, which is a cute little AI-generated way of saying, when you can read your indicators, when you can read your charts, you're going to find more. My favorite quote of the year, and probably of last year, is that the high probability trend trade isn't going to be your get-rich trade. The high probability trend trade is what's going to open doors for you to see your get-rich trade. It's going to open doors to find that next trade, that next opportunity. So again, in the spirit of simplicity, your simple plan for consistency is simply don't fight the large chart. Don't fight the large chart triggers. If they're up, go up with them. Don't try to go down. If the large chart's in an uptrend, follow it. If the large chart's reached a termination, sit on your hands. Guys, don't fight the large chart. It is the path to financial suicide. Take 20 days. 20 days to define your entry. It won't even take you that long. Guys, define your entry, because great entries create manageable trades. Great entries reduce risk. Great entries maximize profit potential. And great entries come from the accumulation of those three advantages that give you a statistical advantage each and every time you pull the trigger. Once you're in the market, you've got to manage it. You've got to do something with it, guys. And this is where some of you are going to get that big adrenaline rush. It's easy to get into the market. You want to get in at the right spot. You want it to be manageable. And now you've got something to lose, is how most people think. Oh no, I'm in the market. I don't want to give any back. I don't want to lose any money. Guys, your management should be every bit as mechanical and methodical as your entries. It should be nothing more than a series of if-then. So when I created this management plan for the KISS plan, it's designed to do two things for you. It's designed, one, to get you paid, ASAFP, because getting paid is what it's all about. And this teaches you that it's okay to take smaller profits and not always go for home runs. The second thing it does is it talks about intelligent stop placement. It talks about putting your stop where the market shouldn't go rather than where you hope it doesn't go. So the management, and this is in the spreadsheet, is 100% dependent on your ability to pick your entry, to take the correct entry. And if I am in the market And new users, 2 contracts is what this plan is based on. I'm in the market, 2 contracts at the area inside of favorable large triggers, and my stop, my initial stop is 5 ticks below those trigger lines where the market should not go. And once I'm in this trade, I have to do nothing. I have to sit on my hands because I'll never be in control of whether it goes up or down. I'll never be in control of whether it wins or loses. I know that I've entered on a pattern that has been proven through my study to win 70 to 80% of the time typically. So there's a 20 to 30% of chance that they're going to come get my stop. And guys, that's okay. Small losses are a normal part of a positive equity curve. And there's no one in this room that will tell you that they do not take losers. I take losers. Everybody takes losers. The key is to take the correct losers, to take the losers that had the advantages, that are the pattern that has been proven to win more than it loses. So if I don't get stopped out, it means that the market gave me a reversal bar in the direction of my trade. We call this a confirmation bar. It is confirming that the market is now going up with the trend. It is confirming that it's going up with momentum, with the clear path. If I get a reversal bar, then my new stop is 2 ticks below it. I've reduced my risk. And the cool thing is, it's not uncommon to take the perfect trend trade, to get a reversal bar, to reduce your risk, and maybe that market decides to go down anyway. And you're out with $25, $37 per contract instead of $150 per contract. We saw it yesterday in the ES. I think Andy took a $75 loser on 2 contracts on the perfect trade. And guys, that just doesn't hurt. From this point, it's either going to hit my stop or it's going to go to my first target. And again, we're getting paid, guys. Your first target is $100 away from your amazing entry. $100, that's it. And guys, that $100 will be the happiest $100 you've ever made in your life. That $100 is going to just dry the sweat from your palms. It's going to shoo the butterflies from your guts. You got paid. There's your confidence. Children will sing songs about you, and you're going to move your stop to break even. So not only do you have money in the account, you have absolutely nothing to lose. And guys, this is designed to get you to trust that the only reason you're in this trade is because of momentum and path, and it's more likely to go up than down. Money in the bank, nothing to lose. And it's either going to hit your second target or it's going to hit your break-even stop. And if it hits your second target, that second target by design is only $200 away from your entry. And guys, you will learn how to hold for bigger moves. You will change your stop placement, but in the beginning, keep it super mechanical. Because $300, if that's the best that you do every day, is a $75,000 year. And if you walk away from my classroom and don't see the potential to make $300 a day, I have to rethink my teaching. Throw in one little break-even trade, guys. You're in 6 figures. With a solid plan, with adherence to rules, guys, you're going to see the potential to find yourself in this range much easier with a full day of trading. So there's 2 things that you have to know every time you're going to take a trade. This is the exit conditions. Guys, I'm going to give you everything that I'm sharing right now. I need to know why I'm going to enter, and I need to know why I'm going to exit. Every trade that I get into. And guys, each trade has a different set of rules for entry and exit. Entry rules are based on patterns that have been proven to win more than they lose. How do you prove it? Don't take my word for it. Blue Pearl, I want you to assume that I am full of beans, and I want you to go back and study this pattern. I want you to learn this pattern, and I want you to prove to yourself that it's everything that I say it is. If you do that work, you'll be with me forever. And then you have to know why you'll exit the trade, guys. And your exit conditions are just identifying when your advantages are gone, but your target hasn't been reached. 5 ticks beyond those triggers, my advantage is gone. That's an exit condition. So rules eliminate the need to know what's going to happen, guys. Focus on the execution, not the result, because the execution has been proven to win more than it loses. So this sheet goes through, if I'm in a trend trade, what's it going to take to get me out? If I'm in one of those 50-50, those potential to breaks, what's it going to take to get me out? Momentum trades, HVA trades, each trade is unique. But my promise to you guys when we started everything was that I was going to give you everything that you need to be successful. And I do this every day. It's the first hour every day. We repeat it every day. We learned the trigger line and the Fibonacci rules for when it's okay to trade. We broke them down individually. We talked about what they look like, what they mean to you. We even focused on how you can study them to go back to not even have to take a trade to get great at your chart reading. You guys have the ability to simulate, and even more importantly, you have the ability to get feedback on everything that you do. Everything that you see, every question that you have will be answered in this classroom, 15 hours live every week. And my email works, so there's opportunity for coaching outside too. If you have a question that you think of in the middle of the night, email it to me. You have a spreadsheet, guys, and this is your trade journal. This is where you're going to start to recognize the patterns. You have the basic rules and the ability to add to them to grow your knowledge. You have almost 300 pictures of clients. You have management. You have entry. You even have patterns that are going to take you next level. And you have a place to put your pictures to build a plan. You have the KISS plan. You have Chart Reading 101. You have High Probability Trend Trade Checklist. Guys, I'm giving you a zip file right now that is lovingly labeled everything you need. Everything that I just talked about. My PowerPoint, everything that I've shared with you is in this zip file. Steal it, use it, look at it. I did put my PowerPoint in the room because I haven't had a chance to update it in that everything you need. And then there it is in PDF as well. You have everything that you need. The only thing that Nexgen will not provide you is experience, is the repetition, is the practice. That part is on you. Are there any questions about the high probability trend trade? Your PC will tell you that about every zip file that you get, and that's your PC's way of protecting you. Stephen Matthews, you have to make the decision whether or not you trust me enough to open it. But here's the cool thing. If you're uncomfortable, and it doesn't hurt my feelings if you are, there they all are individually in PDF form. Feel free to grab those. And guys, you've got everything you need now. So the second hour is going to be looking at stuff. You're welcome, Stephen. I get it. Not everybody wants to download stuff. I'm totally cool with that. I have had more than one computer crash. I'm going to share one more thing with you, and then I'm going to take a break. And this is for all you new folks, and so for you old folks. The key to all of this, to everything we're doing, is just having a foundation, guys. Building up that foundation and then compounding a little bit. If you establish a limit of entry after confirming your triggers, can you jump? You can do whatever you want, Blue Pearl. That is the beauty of America, is nobody can stop you from doing whatever you want to do. But let me show you this. I have a picture that revolves right around that question. There's 3 entries that I see with new users. I was with you on that one. I turned set into established, but I think it was the same. So here's the first entry that I see a lot with new users. And this is the I don't want to wait. Oh my gosh, fear of missing out. It's going without me. And I see them jump in right at the top of these moves. Guys, this is fine. There's people that have trading plans that use this. But if you do, this exit or this reversal bar should be your cue to get out. There's no reason to hold beyond that if you make this mistake. The second one, Blue Pearl, and this is very much what you're talking about. Our entry charts are a 5-1 chart as opposed to a 13-2 on the large chart, which means that there's a lot of little fluctuations in these bars. 2 or 3 ticks worth of fluctuation creates this big scary tail that makes you believe the market is going without you. And it's very common to see new users do exactly what you just asked. Can I jump in if it's headed my direction? Well, this is why we have to build a little bit of trust. If you jump in, I see you guys in at the top of these little tails all the time, and all you've done, Blue Pearl, is you've increased your risk and you've shortened the distance to your profit target. This is why I talk about study a lot, because if you learn to believe that your best entry comes from areas inside of triggers, you're going to see these fluctuations on the way down. You're even going to see fluctuations on the way up to your target. But this is the one that gives you the least amount of risk. This is the one that gives you the absolute highest room to get back to that profit area. Does that make sense? I like the question. And it's funny because I have this picture locked and loaded because it's real common. The fear of missing out is strong. It really is. And you're going to learn to squash that fear of missing out by learning to trust the methodology. So build a foundation, understand the basics, and then each day get a little bit better. And this is my new favorite word, Kaizen. With the voice crack, it's imperative that you have the voice crack. The philosophy of continuous improvement, guys, becoming 1% better every day. Not trying to become a day trader in a day, but rather taking every day to get a little better at your chart reader until you're a confident day trader. So for you brand new users, I'm going to blanket you with very conservative rules. We're going to talk heavily about the recognition of advantages. I will give you a solid plan. I've already given it to you that optimizes your chances of success as you learn to read the indicators. So for all you new users, termination conditions are horrible, and not having momentum is detrimental, and not entering in areas inside of favorable large triggers, you might as well shoot yourself in the foot. Blanket rules because it's going to increase the likelihood of success, guys, and that success is where the confidence comes from. They're not always bad. True story. But until you have the experience to know when to use the exceptions, it's just safer that way. I tend to keep you around longer if you focus on advantages. So just like anything, the more time you spend with it, the more you're going to see. And this is what's going to open door for you. And that goes back to what Ron says in the room. This isn't your get-rich trade, guys. This is the one that teaches you to recognize your get-rich trade, that teaches you to hold and manage for bigger moves. So you've got to learn the process that yields the results. And I break this down individually every day, and I focus heavily on the process. The results tend to follow. And that's where the KISS plan comes in. If you keep it that basic, if you follow simple rules, and most importantly, if you're okay not keeping up with the Joneses, you can find an extraordinary level of success. I talk about this before we go in the second hour, because Blue Pearl, Nish, Jay, you're going to see people taking trades that just don't fit the high probability trend trade. And they're just at a different place than you. That's it. They've learned to read their charts. They found patterns that appeal to them. So don't try to do what everyone else is doing. Focus on your journey. And I've watched it repeatedly over the years. The more you try to find, the less you tend to find the winners. So the further you deviate from simple, the longer it takes you to become to become comfortable with the pattern recognition. And this is the one that I can't overstate. Keep questioning everything. Do not let a question rattle around in your brain and not drop it into this room. I want you to learn. I want you to become comfortable. I want you to be able to see these advantages. I want you to speak out loud when you see these advantages. Scare your pets. And then most importantly, give yourself a little bit of grace, guys. You're new. It's okay to be new. It's okay to not know everything. We're on this journey together. Scare your pets. Oh, my dog understands odds favorable momentum. Like her ears perk up. It's kind of cute. So guys, every day is a journey. Every day is an opportunity to get better. Every day is one step closer to financial independence. Let's focus on the process. And that's what we're going to do for the next couple hours, really. Is one, we're going to answer your questions. Look at that. Potential to break. Right back to freaking support inside of favorable large triggers. So Blue Pearl and Nish, I don't tell you this stuff and go cherry pick pictures. Look at that. Circle the tail. Holy crap. Everything we could hope for in an easy $300 winner right up to resistance. Live in front of you. And now we've reached our termination. There's just no reason to hope. Let's wait for a second. New York City Pug. Did that little extra with the triggers help on the entries? I literally had you in mind when I was developing that. I was like, how do I make it even easier? I hope that helped. Because great entries, man. Look at that. Virtually. Now you just have to practice and get feedback. Is everybody okay taking pictures? Do me a favor, ladies and gentlemen, brand new people. Go to your search bar and type in tech and open up that TechSmith capture. Practice taking a picture. Whether you have TechSmith, whether you have Snagit, doesn't matter. I want you to post a picture in the room. And remember, we want to see 2 charts. So make sure you click and drag and get 2 charts. If you're using Snagit, you're going to click that share link and it's going to go to screencast. And it's going to put it right on your clipboard. And you can drop that link in the room. The same thing with TechSmith. Or you can just copy that picture and you can drop it in the room and open the door for a private session, guys. And it doesn't have to be a picture of a trade. It can be a picture of strong triggers. Hey, Mark, did I read this correctly? It could be the picture of only the potential to break. Mark, that wasn't a clear path, right? That was only the potential. Mark, did these weak triggers give me any indication that the market may have reversed? Hell yeah. Look at that termination condition. Egads and little fishes, guys. Every lesson you need is provided by the market. Take your pictures. Build that knowledge base. I'll be back in 5 minutes. When I come back, we're going to click on all the pictures that you guys have posted. We're going to celebrate every victory. I am going to publicly humiliate you for any... No, not really. I would never do that. I'm the warm fuzzy guy. But what I will do is every trade posted in this room, guys, I'm going to talk about momentum, path, and entry. Whether it is a high probability trend trade or a medium probability trade or a momentum style trade or just a jump the fudge in trade, we're going to talk about all 3 and we're going to talk about them on 2 charts. So make sure that you give me 2 charts and make sure that you tell me what you saw, because my job is to make sure that you're seeing these things correctly. So go stretch your feet, guys. Go stretch your legs. Nobody's good for 17 hours in front of a computer screen. I'll be back in 3 or 4 minutes and we'll get into that second hour. Let's talk real quick. S&P. Large triggers up, small triggers down. Colors don't match. Do I have strong triggers? Blue Pearl, Nish, Steven. What do you guys think? The colors don't match. Do I have? No. How easy is that? Price reached Fibonacci support. All the triggers are above. Do I have a clear path? No. I'm telling you guys, if you keep it that simple, life becomes easy. Price reached resistance. Triggers below. Don't go long into it. Larger red, smaller green. You don't have momentum. Guys, this is a go fix a sandwich pattern. Do anything other than try to predict what the market's going to do. I will see you guys in 5 minutes. Stretch your legs, pet your dogs. Let's get into that second and third hour. These are where we really have some fun. Remember, I'm not judging you on the trades that you take. What I'm doing is I'm looking for momentum, I'm looking for path, and we're talking about entries. Maybe there could have been a little less risk. Maybe there could have been a little higher profit potential. And it's important that you go through these concepts and you look at these things. If you have questions about somebody else's chart, feel free to ask. It's okay. We're going to start with Miss Jen. She got the first one of the morning in here. And let's see what she did. Jen says, divergence triggers roll. This was also yesterday's low. Look at her. She's adding some extra stuff to it. She had odds favorable momentum. She had a clear path. And she just took a pullback. And it's at that mid-band in between the triggers. And she took it all the way up to yellow 1-to-1s on her small chart. She said, you know what? That's a great spot for me to get paid. Jen, outstanding. And guys, what you're going to see if you're brand new is you're going to see a lot of people doing the exact same thing as one another. Here, Jen has strong triggers, 5960, 5960. She lets it get through trouble, and then she just finds an opportunity to ride that momentum down. And once again, absolutely beautiful. When the momentum starts to go away, she chooses to take an exit. Jen, outstanding trading. You guys don't know this, but those of you that keep doing this great stuff, I'm going to force you to teach my class one day. Guys, this is Ron. Ron is the king of the chili dog. And it's funny because the chili dog is a trade that came to be, and it used to stress me out because it didn't have a pullback. And it just looked like it was just jumping in. But there's so much more to it. And this is one of the reasons why when you see other people doing things, don't just assume that it's as simple as it looks. So one of the things that he does is he says, all right, I know decisions are made at fibs. I know that when price is on these areas can create bounces and fights and all those things that you see. So I'm just going to let the price bars completely clear it. And this is helping Ron assure that he's not in that decision-making zone. And then once he gets below it, if everything says down, he looks for that momentum on a smaller chart because momentum pushes a market. And you'll notice that he takes a quick entry, not a pullback, just jumps right in. And he takes a quick exit, guys. And this chili dog trade, I love. This is the trade that I taught my wife. This is a trade that I taught a buddy of mine. And that's a trade that Ron taught me. I learn from you guys every day. But what it does is it takes advantage of the idea that decisions are made at key areas, allowing the market to get beyond those areas, and then simply utilizing momentum to find a way to capture and take profits. This is not a high probability trend trade, but once you understand the high probability trend trade, you will be absolutely floored at how often you see this potential. I try to throw one in every now and then because it's important to me that you guys realize I trade the same thing as you. Maybe a little different, but this is nothing more than a trend trade. My large chart was great. My large chart was clear, and I just took a nice little $450 short. And my entry looks late, doesn't it? Because this is the NASDAQ, and the NASDAQ moves 10 times faster than anything else, and it's terrifying if you're brand new. And I force reversal bars to get me into the market because I like that confirmation. And sometimes, even with an order right where that reversal bar is going to happen, I'm still in 6-7 ticks lower because the NASDAQ is a screamer. But once you have a plan, you can adjust your plan. All right, let's go to the next one. What else is posted in this room? Oh, I like this one. I'm going to do this one. One of the reasons that my classroom is so easy to teach, we've been saying the same thing for 27 years. Nexgen has been teaching people to trade for 27 years. There we go. And this is from 2004. And in 2004, we had what was called an edge trade, where you reach Fibonacci resistance or support, where those small triggers roll, on your large chart and you simply sell a pullback to them. And I thought, man, how do I kind of illustrate to these new users that we don't have to change our plan all the time? Fibonacci support held, the small triggers rolled, and there's your pullback to them. And guys, that was a quick $300 on 2 contracts. A very easy trade based on the same methodology that Nexgen was teaching 21 years ago. This has stood the test of time. And remember, it's time that gets you comfortable to take these trades. All right, what's next? CAV. Trigger separation, got place limit order inside of large triggers, place your stop below the 1-to-1s. So CAV said he had momentum, he had the potential to break, he had the perfect entry, and he got paid. Does that look familiar to anybody? I did yesterday, not yet today. Blue Pearl, do you see it? Momentum, potential to break, and look where his entry is, just above, inside. Niche, do you see it? I don't know where CAV lives, but I can tell you it's not where Jen lives, but they took the exact same trade, the exact same conditions, the exact same pattern, and they both got paid. And this is what I really want you guys to drive home into your brain, that it's the patterns. It's the patterns that are producing results. It's the patterns that are giving you the advantage. All you have to do is learn the patterns and follow the patterns. And guys, this is Marty. Not the best momentum, but certainly an uptrend. Everything is up. Marty gets in, Marty gets out. Easy money. Chili dog. There it is. Soon the student will be the teacher. CAV, same thing. Momentum, potential to break, pull back to the area inside of triggers. First entry got in and out. Second entry should have waited, took off the next fib, reached your target. What got you in and out? Made a couple of bucks. First trade was a mistake. Okay, trailed your price bar, got kicked out. Got you. Mismanagement. It happens. It certainly happens. But that was the perfect trade. And it did everything we anticipated it doing. And CAV still managed to pull off and get paid. Nicely done. And Blue Pearl, I saw that you posted. I think it's amazing that you posted. I do go through these in order, so don't ever feel like I'm ignoring you if I don't get right on it. Cindy says, Mark, I don't care about your old eyes. Check this out. All the momentum in the world, potential to break, perfect entry right at support inside of favorable large triggers, easiest money you'll ever make. And Cindy, that was your husband's? I want you to high five him and give him a little kiss on the cheek for me. Don't make it awkward, but that's a beautiful trade. Absolutely perfect trend trade. Nicely done. You guys are making me so proud this morning. Proving that those trend trades work. All right, Pete. Pete says, multiple strong bottoms, all the divergences at fibs, it rolls, odds favorable, potential to break. Pete says, I'm just going to JTFI with all this momentum and nothing in the way. I'll take 3 off at 10 ticks because I'm in this to get paid. And then I'll get out if there's any sign of momentum wavering. And absolutely beautiful, Pete. Momentum and path. Momentum and path. Momentum and path. 10:30 a.m. crude oil inventories. Thank you, Cindy. Week top. Everything says down. You're in at 74.90. CAV lets it get below all the trouble. In before the fib, out at the fib, lets it break. In after the fib, out at the next fib. Absolutely stunning work. Sorry, this was Pete. My bad, Cav. Pete, beautiful. And guys, this is what I want you to see. And I think this is the most important thing. I'm going to take a picture of this picture because a lot of times there's really cool lessons that you guys didn't know you were teaching. Pete let it get past trouble, and then he got in. And then he got paid at trouble, and he said, I don't care, I'll take a small profit. If it keeps going, I'll find another entry. He lets it get past trouble again. He gets paid, and then he gets out at trouble. He doesn't know if it's going to break or hold, so he gets paid at the line. But the one thing that Pete knows is decisions are made at key areas. So he's trading from them to them, not directly into them. You'll notice that he doesn't have any entries directly into a fib, directly into one-to-ones, directly into divergence lows. He waits for the area to clear, and then he finds a way to get paid because the large chart is screaming with the best momentum ever. Pete, outstanding. It's tempting to just want to hold. Pete's figured out how to get paid multiple times. I love it. And then Ron has what we call the pirate trade. Potential to break. Divergence says it's less likely to break. Everything is cranking up. And Ron says, look at that. It holds, it pulls back. Let's ride it up. And he just takes it right up to the white bar, the reversal bar marker on his large chart. Guys, this fights direction. This fights momentum. Right? The triggers aren't favorable. But once again, newer users, you will begin to recognize more trades. Once you understand some concepts, you start to see patterns. This is one of the patterns. This is the white bar trade really shouldn't work trade or something like that. Gives me anxiety and heartburn, but he does it wonderfully. Nice job, Ron. All right, Jay, let's see what you got. Odds favorable momentum. You got in after trouble and you got out at trouble. All right, Jay, so I'm going to ask real quick. You said maybe should have stayed in longer. You have two contracts. 50. You made $100 there? Are you mad about $100? You are if it keeps going, right? Guys, remember the goal is to get paid. And getting paid at trouble is rarely a bad idea. And Jay, remember the lesson from yesterday. As long as it doesn't close on the wrong side of those triggers, it's nothing but up. So great trade, dude. Nice job taking some recent lessons and translating them into a little bit of cash. Weak top because the triggers got through. Strong top because the triggers didn't. Weak bottom because the triggers got through. And then Jay, not quite a strong bottom. And let's talk about strong tops or bottoms. Don't just accept it. Force me to explain it. So when we talk about strong tops and bottoms, there's two things that have to happen. And I'm just going to go find a strong bottom real quick. This is a perfect example. Two things have to happen. The first thing is it has to be that no triggers through termination. And you've got that 100%. So when I talk about a strong top or bottom, I'm talking about price reaching an area and the triggers staying above. And this is only the beginning. This is the first step in a strong top or bottom. The second step, Jay, and what didn't happen yet in your picture, is those large triggers have to pinch and change color. It's this reversal of trend, of those large triggers now going up from the termination condition. This is what creates the strong bottom. Does that make sense? Because sometimes you'll get that no triggers through termination, but it never reverses, and sure enough, it continues down. So great picture, good lesson. I like that you're just taking pictures. It's not even a trade. And I know you're just trying to trade the large chart only now. We'll get to those pictures and we'll look at it. But I noticed here, you got in at the very top and you had that gap theory against you. And I don't imagine that one worked out. And then here, you got in but you got in against triggers. You got in against direction. You got in against momentum, and that one didn't seem to work out. Might be some good lessons there. All right, Andy Man. No. Weak bottom, odds favorable, and clear path. So Andy's talking about right here where it rolls off support. The smalls are above the large are getting wide. And that tail on the large chart right here happens to be a pullback right to support, right at those triggers. And then just way too tight on that stop and gave up a little bit of profit. But great trade, Andy. Guys, I'm going to tell you right now, if you just go, oh shit, I don't want to give much back, just hit close. Because you're going to give it back. More often than not, guys, this small chart is fluctuations. It didn't even make a reversal bar that stopped you out, Andy. If you're going to be that tight, just get the hell out of the trade. Keep the extra 50 bucks. That's not trading advice. I don't give trading advice, but I see this all the time. I'll make it so tight. Man, if I'm that scared, just hit close. All right, Nanda, confidently hold this and get out. Odds favorable. You saw this when you logged in. You had room to the fib, so you just jumped in. And you got out of the fib. Nothing wrong with that. Quick profits, Nanda. Great job respecting the fibs. I remember when you didn't. The good old days. Here's the same thing. Momentum, room to trouble. You get in. You get out of trouble. Sell 2 at 51. It looks like you got stopped out right here. You tried to go short, and I'm not sure why, but you got stopped out. I don't know what your management plan is. And then with everything down, you said, I sure hope this fib holds. And it did, just enough for you to catch a little bounce. Nanda, I've got to tell you, momentum, direction, momentum, direction. Everything on God's green earth is red. And you said, I hope that blue line holds. Have you gone back and looked at it historically? I want you guys to see something real quick. And I know, but Mark, I won. I made money. That's cool. I want you to make money every day. I hope it holds. I hope it holds. I hope it holds. Oh, it finally held. I hope it holds down. I hope it holds down. Oh, it finally held. I hope. More often than not, you're going to get run the fudge over. Just annihilated. Guys, I'm telling you, there's a time to go counter trend. And there's got to be a time for patience. And if you go find 50 pictures, Nanda, with odds favorable momentum into a trade, more often than not, you're going to find that you lose that trade. My goal for you guys is longevity. That's okay. You're still testing the waters. You're learning. But I'm obligated to tell you that this is super aggressive and very low probability. And it's going to let you win just enough to get you comfortable breaking your rules. Ask me how I know. All right, so Jay, you said you're trading only the large chart, right? Using only the 13.2 here. So with everything going down, you jumped in and you waited for it to get to the wrong side of the triggers to get out. Jay, that's 5 points getting you out. Jay, I love the idea that you're focusing on letting the large chart lead the way. I think that's important, and I think that that's a huge step forward. But you got to remember, we've put a lot of time and effort. Inside of this one bar, Jay, are all of these bars. Dudes, you can make so much more money and have so much less risk by allowing the smaller, faster chart to be your entry chart. And you can avoid giving so much back by letting that refinement chart be your exit chart. Which pick? The one that I just showed? Guys, can you see my screen? I just dropped it in the room. Jay, you might need to refresh your Discord. Everyone else can see me. So just log out, log back in. I like that you're letting the large chart lead the way, and I know that that's the effort there. But that small chart is what gives you the ability to really refine, to reduce risk, to be able to take better profits. Odds favorable, strong triggers, clear path, rules met. Lowered your stop to reduce risk, turned out to protect you, only lost 180, one of the 20, 30%. I agree. So Marty, I want to show you something on this one. And guys, for you guys that are just jumping in, great lesson here. Your trade was up here. Let me make this bigger so I can see. This trade was ready to happen. We'll say right there, which means what? 67.5. 67.5. That timely entry was the difference between making money and losing money. Guys, one of the things that you'll find to be true is the longer momentum goes, the more likely it is to create a bigger retracement. The further away from areas you get, that's why we take trend trades. Because when you start getting out in the middle of the field, that's when these bad boys happen. That's when those pullback to areas inside of triggers happen. And that's one of the reasons, Marty, that the timing is so precise, getting in right when that bar clears. Ron taught me that. It's a pretty good lesson. So if you're looking for that chili dog and you're like, oh man, I should have been in up here, those are the ones where I just sit on my hands and say, I'll wait for the next one. There will be another one. When you click and when it registers, yeah, but that's not NASDAQ, that's gold. And again, that goes back to why I don't think that this trade is suited for the others. You're finding success with it. But that's just a good lesson. Catching these style trades closer to the trouble, when it clears, you have a higher chance of it making that run. You know I see everything, guys. It's annoying. I see everything. I see when you post a $400 winner and your P&L is only at 50 bucks, and I'll ask you about that $350 and where it went wrong. All right, it's a miracle I am goals met with this market volatility. Is it? Odds favorable, 50-50, perfect entry, smart exits. Andy, I don't think it's a miracle at all. I think this is some amazing chart reading. This is rooted in advantages, and you did everything in the right spot, and it made it easy. Don't you undersell the work that you've put in, because that's pretty outstanding. Blue Pearl, Nish, Steven, do you guys see it? There's that momentum on the large chart. It has the potential to break, and it pulled right back to resistance inside of triggers, and I'll be damned, it went down. Andy, it's FOMC day. And FOMC day is crazy. And Steven and all you guys that are new, I promise you, if you keep just looking for this, you will find it the same way these guys are finding it. But the market feels like it moves fast in the beginning, and that's where recognition comes in. That's where really doing the same thing over and over is going to pay huge dividends. All right, Blue Pearl, I love that you are already posting. See if I can find what you're reading or what you're writing. Small triggers were still crossing over. Yep, they were working their way above. And there's one of those tails, and there's one of those tails, and that's where it gets through. And look at where they line up. Pull back to support, pull back to support. How amazing is that? Whoops, I don't see the other ones. So Blue Pearl, on day one, you're already starting to get the work done to recognize the pattern. That's pretty outstanding. Day one, and it's already starting to click. I just want you to stop for a second and think about where you're going to be on day 100. If on day one, simplicity is already leading the way. I love it. Who is this? This was Irish MKC. Trading. There's your NASDAQ one. Cranking above the mid band. Easy entry. Awesome profits. Money, money, money. Nice job, Marty. It's the same look over and over. So Blue Pearl, I like that question. Should the trade still have been taken because the triggers were still crossing? Let me go back and open up your picture again. And let's just talk through the large chart look. And I want to do this, Blue Pearl, because I don't want to dissuade you from doing what you're doing. Because what you're doing right now is you're looking for everything up in a tail. Is that right? And you're like, this is going to help me to find entries. So let's go through and let's do, if I were actually live and looking for a trade. This is my thought process every time. My first thought is, what direction should I be trading? Up, green, down is red. So you knew to go up. So you've already got that one. Whoops. I don't know how I messed that up. Okay, so first we'll just do this. I define direction. And then I look at momentum. And if I'm brand new, Blue Pearl, I'm a high probability trend trader. I want strong triggers, right? There's no separation. You don't have it yet. So what you are going to say to yourself, and this is that scare the pets thing, is when you look at that and they're still crossing up, what you're going to say to yourself is, I don't have odds favorable momentum. I might have to manage a little more aggressive. Does that make sense? And then you're going to do path. Is it a clear path? And this one is actually no. So what you'll do is you'll literally say to yourself, there is something in the way. Do I want to trade into it? Hopefully the answer is no. But if it's not, if you do it anyway, I may have to manage aggressively. And what happens is you'll put yourself in a position where every time you look for a trade, you're literally going to talk through momentum and clear path. And if they're both present, you're going to say to yourself, hell yeah, I'm taking this trade and it's probably going to be easy. But once these start to go away, what you do is you say, all right, I may have to manage a little more aggressively, or I'm not willing to sacrifice that many advantages and take a trade. So if I'm looking at that picture and I say, do I have momentum? Whoops. All right, I don't have momentum. Do I have a clear path? And let me show you why I do this. Price reached resistance. All the triggers are still below. So what I have to say to myself is that, man, I don't have a clear path either. And every time one of these goes away, that's 33% of your advantages. That's 33% of your advantages. And what you'll find yourself doing, and hopefully everyone in the room does this, is that if I've given up 66% of my warm fuzzies, do I really want to take that trade? Does that make sense, everybody? When you begin to speak in terms of advantages, you'll talk yourself out of half-ass trades. You'll talk yourself out of breaking rules. You'll talk yourself out of risking your money when you can visually see that so much is wrong. But what you're doing right now, Blue Pearl, is you're saying, I know that when things are going up and I see a tail, there may be an opportunity. And the reality is, there might be a day where you take this trade, where it fits your plan. But in the very beginning, it's a little aggressive. The second one, on the other hand, look at the separation. Look at the potential to break. Those large triggers are almost all the way through anyway. And sure enough, as patterns do, it pulls right back to support right inside of those triggers and gives you an awesome opportunity to make a little cash. So the one thing that I can't do is I can't tell you guys when to trade. I can't tell you guys how to trade. I can't tell you guys when to break rules, when to follow rules. But what I can do is tell you that when the 3 rules are met, life is pretty freaking easy for the day trader. So if you get in the habit of talking to yourself about advantages every time you look for a trade, you can make life very easy on yourself. Does that make sense, everybody? Maybe, kinda? No? Thank you, Stephen, for saying that. Nanda says amen. All right, Stephen, so thank you for saying that. Guys, this is how this classroom becomes amazing. By somebody being willing to say no. All right, so we're going to go through it. Play along with me. This is a high probability trend trade, right? This is what I'm looking for on the large chart. Whoops, sorry, wrong one. Every time I look for a trade, Stephen, every time I'm looking for this high probability trend trade, the first question I ask myself is, do I have strong triggers? Do I have the advantage of momentum? Is this a market where the odds are favorable for it to push in the direction of the trend? Does that make sense? These are the questions that I ask myself as I look for a trade. These are the questions that you should ask yourself as you look for a trade, especially as a new user. Do I have momentum? So if the answer is yes, that's amazing. I am 33% advantage is met. And then I have to ask myself, do I have a clear path? Are there no termination conditions? And I go through that process. Did price reach an area? Where are my triggers? Well, if it turns out that I don't have termination conditions, what I've done is I've added another 33% advantages. So now I've got a large chart that's telling me a trigger is a ladder going up green and underneath a large trigger exists. Okay, so let's back it up. There we go. A little basic vocabulary. And I want to do this for you too. Because I'm all about giving fish and teaching fishes. So one of the things that I encourage you guys to do as a brand new user, if you haven't already, is go through this section on the user guide, the indicators that you're going to see on your charts. And the first picture is the trigger lines. And there's 2 trigger lines, Stephen. There is a large trigger that is dashed, and there's a small trigger that is solid. And what these are is moving averages. And full admission right now, Stephen, I'm not mathematically inclined and I'm not very tech savvy. But what I do know is that the small triggers and the large triggers will work together to show me momentum. So when my background is red, let me go to my next picture. Is that good right there? So there's what a trigger is, what it looks like, both the small and the large. Because you've got to know that to go to the next step. Oh, this is where class gets great. Stephen, I owe you a beer if we ever meet in person. So my first rule says that I have to have momentum. So what we're going to do is we're going to use that small trigger and that large trigger to define strength in the market. So Stephen, in order to have strong triggers in an uptrend when the background is green, the small triggers, the solid lines, doesn't matter how they're made, who made them, doesn't matter what the numbers are that go into them, when they are above the large triggers, when there's space between, and let me draw the picture, because I think this visual helps people a lot with the trigger lines. I want you to picture scissors that are open. And when your scissors are open, and we'll make it nice and big, when your scissors are open, You have strong triggers. When scissors are open, scissors can cut, right? You can get work done. And Stephen, this is your look, whether it's up or down. When the scissors are open, when the smalls are below the large in a downtrend or above the large in an uptrend, those open scissors define strength. And that's what it looks like to have rule number 1 met on your large chart. Does that make sense? And then, of course, when the scissors close, your advantage is gone. And this is why I say learn it in steps. Learn it one at a time. So, Stephen, let's go back. And let me open up a large chart. They're the exact same thing. So watch this. And let me do it this way first. Hold on. Background color, Stephen. Have you ever traded futures? Because I didn't, and it confused the hell out of me in the beginning. So when the background is green, we're going up. Okay, so this makes sense. And in the futures markets, I'll look for rules met for long trades. And long trades mean that I buy the market, which just basically means I am hoping it continues up so I can get paid at a higher price. That makes sense, right? That's kind of the stock thing. Buy low, sell high. So here's the beauty of futures. When the background is red and the trend is down, oh, I love this. When it's down, I'll look for the same rules to be met the opposite direction. No, this is the beauty of futures. Oh, you're going to love this. You're going to make it coming and going. I will sell, and this is what it calls to go short. I will sell, go short, and I will exit my position lower to get paid. And you're asking yourself, well, how the hell can I sell something that I don't own, right? Chris Novak, if your ears are on, give me the link to that video that you gave me. This is the beauty of futures markets, Stephen, is in an uptrend. Let me find a long trade. In an uptrend, I can have the trigger lines going up, the trend going up, and I can pull back to support inside of favorable large triggers. And I can make money if the market goes higher. In a downtrend, here we go. In a downtrend, I can have the trigger strength down. I can sell a pullback at an area of resistance, and I can exit lower, and I can make money going down too. So when your 401k is absolutely screaming, you can make money in futures markets going both directions. So imagine this picture up, right? Everything is strong up. That's the exact same strength to the downside, the exact same reasoning to take a short trade. So I sell. Watch this. And the question that I had, Stephen, over and over and over, and I frustrated the hell out of my brother. If I sell the market, my anticipation is that it will continue lower. And this isn't a real trade. So what happens is if it does go lower and hits my target, I can make money as the market continues down. See how the P&L goes up as the market goes down? This is the amazing thing about futures. Is all you're doing is you're saying, I think it's going to go down, so I will sell to enter and buy to exit. The same way in stocks, you would buy to enter and you would have to sell it to exit. Futures gives you the ability to make money both directions. Because there's always somebody on the other side of your trade. You're trying to go short, somebody else is trying to go up. And if more people want the market to go down than up, it's going to go down. And typically, it goes down with that great momentum. And these lines on your chart help define where it has the highest potential to stop. So I accidentally took one contract off. So we have one contract in a short position, and because I sold it to enter, I buy it to exit. And so going short means getting out or... No, not sooner at all. It's the exact same trade. This was, and I kid you not, Stephen, it took me a month to come to terms with selling something that I didn't already own. So let's see if this picture helps. When everything is red, when the trend is down, when the momentum is strong, I'm going to sell a pullback at resistance inside of triggers. This picture is just the polar opposite of this picture. When everything is going up, I'm going to buy low and sell high. When everything is going down, you are going to sell high and buy low. Thank you, Paul. Okay, so going long means that you are predicting on the value of a future increasing, and going short means that you are predicting on its value decreasing. If you think that the underlying price of a future will increase based on your own fundamental and technical analysis, you can open a long position. I guess the same thing, if you think the underlying price of a future will decrease based on your fundamental analysis, you can open a short position. And I'm going to find you this video, Steve. Chris Novak has it, and it's amazing. I'm going to see if it's in our gallery, because he sent it to me. No. I'm asking him right now. All right, I just sent that to him to see if he'll do it for me. But it's just, this is one of the beautiful things about futures, is there's opportunities both directions, whether the market is going up or going down. And it all relies on that fundamental. Do I have momentum? Is my path clear? And you know the pattern now to find the entry. And that's what we do every day. And you'll find that some people see long trades all day long and they can't grasp the short trade initially. Some people see short trades easily and struggle with long trades. You'll find your groove. But that groove has got to revolve around momentum, path, and entry. Does that make sense? Oh, there you go, Chris. That's about the best I've seen. Shorting a stock or a future contract is basically allowing you to borrow a security at a certain price and selling it at a lower price, and you keep the profits. That's what the video is if Chris sends it to me. It's me saying, hey, Steve, I want to borrow $5. I want to borrow $5 from you because I can make 15 down here with your $5. And I'll just give you your $5 back when I'm done, and I'll keep the 10. And Chris says, sure, he'll find that video for us. Sometimes I don't explain things as well as I could. I love that because, guys, these are things that scare people in futures. How can I do that? How can I make it, how can I make it both directions? So see how it's still going down, Stephen? If we stayed in this position, we would be making money every tick on the way down. How do you keep the difference? So if I sell, we'll see if it goes down. If that entry at 74.10 hits my target at 74.04, that is $60 worth of movement. So once it hits my profit target, if it hits my profit target, it will exit my position. It'll pull me out of the trade, and those winnings go into my account. If it goes against me, if this market goes up and I lose money, it will pull that money from my account. Does that make sense? So this is why we get in with all of the advantages, and we can define where trouble is. And watch this. So there we go. It hit our target, and we made $120 on that particular move right there. Because we guessed with the triggers down, with the trend down, with the momentum down, that it would go to the blue fib. And sure enough, it did. It went right to the blue fib. All right, let's see if this will open up. Let me know if you guys... I'm going to see if I can make this open up, and you guys have to let me know if you can hear it. Desktop. Hold on. Maybe it's not done downloading. All right, I think it still has to download. It's a pretty big file, so we'll play it. But that's essentially what it is. You enter the market, and your indicators tell you that it's more likely to go lower than it is to go higher. And you pick your target, and when you exit there, you keep the money. I need a better plan for explaining that, I think. I really do. So I'm going to see what I can do. Jay, what the hell is all of this? Broke out of your range box, 1 minute chart, strong top, triggers, you get in with momentum, you get out at fibs. I like it. Way to use other stuff. I think it's cool when you guys supplement your other things with Nexgen. Most people say that it helps a lot to find targets, that it helps a lot to trade with the overall trend. And then one of my prize students here, Paul's been with us for a while. When that termination reverses the market, look at this. Perfect entry. It doesn't get below those triggers. And Paul finds a way to make some money. Absolutely beautiful, Paul. Nice trade. And then bingo. That's the happiest sound. Bingo means that you got paid. Bingo means that you hit your target. Man, I'm trying to get this thing to download, but it isn't. Nice trading. All right, who's next? Miss Cindy. Termination condition. It rolls, strong top, odds favorable momentum with the potential to break. Cindy says, check it out, entry at the area inside of favorable large triggers, and easy money. Cindy, beautiful trade. Bingo was his name, Ron. So, Stephen, here's a great example. Do you see the momentum, the separation between the small and the large? It looks just like the green. It's just red, letting us know that things are going down. But it's that separation, those open scissors. It says, hey, look at this momentum. And then the small triggers are through the area. The large triggers aren't, so these areas have the potential to break with that momentum. And what Cindy said is, I will sell the market at this resistance inside of triggers. I'll take my first profits, so I'll buy 3 contracts back right at trouble, and then I'll let 1 contract run the distance because this momentum says the market is most likely to go down. And that's how you make money on a short trade. And it's the exact same rules, the exact same patterns, the exact same looks as a long trade. It's just inverted. And you'll see enough of these that it will begin to resonate a little bit, I think. And guys, that's the second hour. And we've gotten through all your pictures. So let's do a large chart read. The first thing is momentum. Small triggers below the large triggers, space between. Steven, do you see how we have momentum to the downside? Blue Pearl, do you see the momentum to the downside? Nish, do you see the momentum? All right, so let's do this real quick. Sometimes there's a lot of noise. Let's get some noise off of this chart. Let's look at nothing but trigger lines. And we're going to take a picture together. So what I want you to do, Steven, is I want you to fire up that camera. I'm going to take a picture of this whole chart. And I'm going to draw an arrow. And all we're looking at is triggers. Triggers is all it takes to define momentum. My small triggers, solid lines, takes 2 lines to make 1 trigger. So my small triggers, they're red, just like the background. This is important. My large triggers are also red, like the background, and they are wide. Space between the 2 lines. So what we're looking at right here, whoops. This is literally strong triggers down. This is rule 1 met when looking to sell the market or take a short trade. So this is 100% what it's going to look like when you have momentum to the downside. Is everybody with me? Almost. That's okay. Day 1, Steven, I promise you. I'm going to annoy the hell out of you until you get it because it's fun for me. So I want you to look at this picture. Smalls below the large, larger wide space between. And I want you to say those words in your head. Smalls below, space between. Smalls below, space between. Everything's red. The momentum is down. Notice over here, smalls above, space between. Everything's green. It's the same recipe. This one's going up because everything is green. This one's going down because everything is red. It's an identical look. It's just inverted. So you go through this process when you're looking for momentum. The first thing you'll do is you'll say, what direction is the market trending? So let's go this way so we don't have any confusion. So the background is red. Your initial thought is down. Nothing but down. Only down. My only option is down, is selling, is going short. With me so far? And then once I establish the direction, I need momentum. And that's going to be that separation of triggers. That's going to be that small below large, open scissors. I think that's what really paints the picture. Open scissors, right? So Stephen, if I take a picture of just open scissors, let's see if we can find it. Those scissors are pointing left, but they're still open. Those scissors are pointing right, but they're still open. Those scissors are pointing up, but they're still open. Those scissors are pointing down, but they're still open. So we're not worried about much of anything other than open scissors. And those scissors are open, red and down. So that's your momentum. That's rule number one. Beautifully, perfectly. And all that says is when the background is red, we're going to look to either sell the market or go short. You could say it either direction. But it's important that you know which direction you want to go. Red will always mean I'm going down. Green will always mean I'm going up, as for the brand new user. And then once I've established this, that is the only look that tells me that my rules are met when the background is red. And let me back this up. Bum, bum, bum. And that is the only look that tells me that my rules are met when the background is green. Those open scissors. Does that help? I love it when you guys make me go into these lessons a little deeper. And remember that repetition is key, Stephen. Seeing the same thing over and over is what's going to get you there. And that's why I gave you guys this, the high probability trend trade checklist. Because it gives you the recipe. Well, and that's normal. And I'm going to tell you right now, you're going to think you understand something and then you'll revisit it and you'll get better every time. We're on this journey. We're in our freshman year, right? I'm not going to let you build a bridge yet, Mr. Engineering student. You might kill somebody. Yeah. So don't worry about the making money yet. Make sure that you can identify momentum. That's it down. That's it up. And if you break it down to that very simple recipe, when the background is red, I have to have this look for rule number one. When the background is green, I have to have this look for rule number two. And then what you'll do is you'll add into that rule number two. If price, these price bars reach a line and those trigger lines, yeah, before making money, your desire to make money will have zero impact on your ability to make it. Your understanding of momentum and whether or not you should take that next trade, that's what's going to get you where you want to be, the process, the pattern. So if price reaches a line and the triggers stay below it, don't trade into that line. And if price is trending down and it reaches a line and the triggers stay above it, don't trade into that line. So even with momentum, that's only rule number one. We're going to add in rule number two. But the cool thing is that if there is no line, and I have momentum, you're going to be able to find opportunities to take that trend trade. So right now, your large chart has momentum. There's nothing in the way. And we're going to look for our opportunities. We're going to look for our opportunities and try to make a little bit of money before it hits the next key area. And we're going to try and do that with a pullback to an area inside of triggers. So when this is going down, there's plenty of opportunity for money. The exact same way when it's going up, we may still find that opportunity. And I promise you, repetition is what's going to drive these lessons home. Seeing the same thing, hearing the same thing. What's crazy, Stephen and Nish and Blue Pearl, is that if you go to the Nexgen page and you go to this video section, this is my classroom. The first hour every day is momentum, path, and entry. The first hour every day is momentum, path, and entry. So I'm not going to give this to you today and hope that you figure it out. We're going to talk about those three concepts. We're going to break them down individually every day for the rest of your natural born life until you start skipping the first hour of class because you just don't need that lesson anymore. Joel, let's see what you did. Joel says, check it out. Not odds favorable because there is no separation, right? Pointing out the weak triggers. No areas inside. You're indirectly into a fib. Might have pulled one off here. That's awesome, Rob. I like that. 2196.25. So Joel, do you see how you entered with weak triggers right at a fib? Can we agree that that isn't strong triggers because there's no separation? Can we agree that that's not a clear path because none of the triggers have broken through? So we broke the first two rules. And the market still gave you some, and that's great. I love it. But these are the things that we'll do for you newer users. I'm not going to beat you up, Joel. Everything's head down. The market was trending strong. You didn't just arbitrarily jump in. You let it go in the direction of the trade. There's a lot of stuff that you did well here. But for the classroom, I have to say, that's not momentum. Momentum looks like this. And that's not a clear path. A clear path looks like this. And that's certainly not an entry inside of favorable large triggers. This is trading right at the area that has a higher chance of holding than breaking. And it ultimately ended up breaking. God bless the NASDAQ. So when people show me charts like this, if you ever tell me, man, Mark, I'm struggling a little bit. Mark, I'm not doing like I want to be doing. Mark, I feel like I'm working my way backwards, and everybody does it. That's where I say go back to the KISS plan. And even the KISS plan has the pictures. And what you'll find, guys, is that the recipe isn't really difficult. The recipe has the same look every trade. And once you burn these looks into your brain, the only way you break that rule is if you choose to break that rule, right? And you will break rules. I still break rules. I still have days where I think I know better. I hate those days. They frustrate me because I should know better. But you really do. You really do have days, and you just got to go back to basics every time you have one. So great interaction there, Steve Matthews. Thank you so much. I'm on the hook for a beer. I'm going to go take 5 minutes. This is weak triggers because the triggers are inside. This is a termination condition because none of the triggers have broken through the area. Rules 1 and 2 are not met. These don't match. I don't have momentum. So Steve, here's that little uh-oh. The smalls are above the large, but the colors don't match. I don't have momentum. My triggers aren't above resistance. My triggers aren't below support. This is rule number 2 telling you, sit on your hands. Let them fight it out. They're either going to go up or down. I don't have any idea which one it's going to be, but what I do know that without momentum or a clear path, I'm not going to do a damn thing until they get outside of this area and give me a little bit of momentum so I can have an advantage. And FOMC is a mess. And Jen, I thought of you. Yesterday, I put an event on my phone, because we talked about this once, that said, FOMC, just don't do anything. And Stephen, that's exactly it. Without momentum or a clear path, why would you risk your money? And that's where this picture comes in. That's where I do this picture in the room. Come on up, silly picture. That's where I say if you're talking to yourself in terms of advantages, why on earth would you take a trade with 66% of them gone, right? And that's how simple it can be. And that's where that 90% comes in. 90% of your day is doing nothing. Yeah, this is a business. This is a business. If you had your entire stock for your store in the back of a truck and there was high water, you would never drive your truck into that water. You would say, let it subside. Let me wait until I have a better chance of safe crossing. This is the same thing. Your rules identify when you have that advantage, when it's going to be easier than harder. So I love that. Good stuff. Guys, I'm going to take a 5-minute break. When I come back, we're through all the pictures, so it's going to be on you guys. Ask a million questions. Let's get a million answers. I'll see you guys in a minute. today. Stephen, true story. Novak men are the absolute worst at analogies. So I'm glad that one worked out. But it's funny that all we do, guys, the whole idea behind what we do is, do I have this advantage? Does it fit my rules? And that's it. It's over and over. Do I have this advantage? Does it fit my rules? So as you're going through and learning, and let me drop this in the room one more time. You guys can download this right over onto your computer. Go to the client trade sec, or go to the basic rules. Yeah, so tomorrow is a day of mourning, Ron. So I'll go over to it in 1 second. Study these looks. Go through and look at these looks. And I've annotated every picture that's in here, Stephen. Awesome. So like just go through all 56 pictures of strong triggers, and it'll really cement that concept. And then here's all the weak triggers, and there's your clear path, and there's your termination. So it'll all start to come together through that repetition. So tomorrow's going to be U.S. National Day of Mourning for former President Jimmy Carter. Equities are closed at 8:30. Energies and the FX are both going to trade. Interest rates close early. Metals have normal hours. So there might be some trading for you guys if you want. Hey, Mark, welcome to the room. I'm Mark. And then everything's going to be normal on Friday. Just so you guys know that's going on. Which means tomorrow, guys, we'll probably do a 101 class. But if there's no live market, there's no pictures. If there's no pictures being posted, that kind of defeats the second half of class. We'll see what's going on. We'll play it by ear. Do market replay. Absolutely. I also want to show you guys from the website under playlists, there's a 60-second video series. Whoops. There we go. I like that. Hit the gym. Make it a spa day. This is a good one, Stephen. I put these together because I don't know about you. I don't have the best attention span ever. So Blue Pearl, KRC, Nish, Stephen, and anyone else. This shows you a lot of different things in a 60-second snippet. Trend trade, what it looks like to take a trend trade short or long. How you can define the trend, whether it's up or down. Termination conditions. Long trade entry area defined. Short trade entry defined. How to study. Day trading made easy. Absolutely, it can be. Large time frame analysis, pivot stop out, strong tops and bottoms, 50-50s. Gap theory, small chart management, exiting with divergence, scale out of your trade, TTFM. Keep it simple. 3 rules for a trend trade. Guys, all of these are 60 seconds long. This is 18 minutes of your life. And 18 very, very specific lessons for you. That's a great thing to do tomorrow. Great thing to do this afternoon. They're just killing crude oil, aren't they? So guys, this is what we call a strong trending market. This is a market with 30 bars on the large chart without a reversal bar. This is more than 3 areas broken without a reversal bar. This is the clinical definition of a strong trending market. Crude oil is now trending strong to the downside. Does everyone notice that this strong trend began right at Fibonacci resistance? Probably not a coincidence. No blue lines until 73.20. We'll see what happens. Some people will tell you in a strong trending market, keep selling the mid-band until it doesn't work. Or until you hit a termination condition. Because in a strong trending market, you're almost never going to get an area inside of these triggers. And sometimes you just got to say, I just don't have a trade. Price reached the divergence high. None of the triggers broke through. You didn't get momentum. And now it's working its way back down. Rules for the save, right? Rules keeping you safe. Rules keeping you out of that losing trade. Look like a nice HVA trade on the top? Might have been. Why is the fib the basis of your system of all other market theories? Because it works, Blue Pearl. That's the easiest answer. So Fibonacci has been used by traders forever. And I'll tell you a little bit of the story. But look at it. It works. Uh-oh, Christy. So when John Novak first started into this business, it had to be at least 30 years ago, he met a gentleman, a day trader, that used Fibonacci. And every morning this day trader would spend 2 to 3 hours doing manual calculations, going through, trying to define key areas of support and resistance based on Fibonacci. And Fibonacci is nothing new. John Novak didn't invent it. It's Italian mathematics. But it is unbelievably efficient. But my brother, and in case you didn't know, John Novak is my older brother, is never happy. He's never satisfied. He's happy all the time, but he's never satisfied. He says if this is good, it's got to be better. So what he did is he took those calculations, Blue Pearl. He took, and you'll see even NinjaTrader has them built in. Where we go, Fibonacci retracements from one peak to another. These are your potential retracement levels. And look at that, right off of it, right off of it, right off of it, right off of it. And that's kind of a very broad stroke of the brush. What John Novak did, and I had no idea he was this smart, is when you open up your T3 software, it measures every swing. And Blue Pearl, when I say every swing, it takes these Fibonacci measurements. What's the fast? F8. And it does it from this swing. And it does it from this move. And it does it from this move. And it does it from this move. But not just in the moment. It goes back 10 days on this time frame. And then it creates synthetic time frames. It creates higher time frames, lower time frames. It goes forward, it goes backwards. And there are literally thousands upon thousands of these Fibonacci calculations. And then the algorithm kicks in. And this is where I had no idea my brother was this smart. All of these are Fibonacci retracements, and all of these are Fibonacci projections and alternates and all those great things. The software decides which lines are the most important. And this is a pretty, there's more to it than I understand. Which prices have the highest concentration, where are the most important. And from all of these calculations, Blue Pearl, let me get these off the chart, you get these areas of support and resistance, these potential turning points, these areas where the market may reverse. And buying low, selling high, we use those momentum indicators and those trigger lines to let us know if they're likely to hold or likely to break or whether or not they've broken. So we can take the precision of Fibonacci, take a little bit on momentum indicators, piece them together with a great plan, and put it right in your lap. And if you just scroll back and see how often these areas are efficient and effective, it'll floor you. It'll absolutely floor you. But Fibonacci is something that my brother realized worked but could be done better, and he made it better. And we've spent 27 years teaching people to day trade with this stuff. And it's unbelievably effective. I hope that answered without sounding a little conceited, but I really do. If you have No, they don't tell you when to trade. Stephen, only you can tell you when to trade. What Fibonacci, and let me get out of the consolidation. Guys, it's FOMC and the market is freaking out. Stephen, if I'm in a short position, this blue line tells me exactly where the market may bounce and reverse. If I'm in a long position, this red line tells me exactly where the market may bounce or reverse. What an amazing advantage. If buying low and selling high is your goal, you know exactly where low and high are likely to be. And here's a cool story, and John doesn't share this, and I think that he should. This is what it looks like on FOMC day. When John Novak was creating the algorithm for this, when he was going through the programming, he had a friend. He's got friends in Chicago. And his friend was in the pits. And his friend's job, his only job, was to know where the institutions were most likely to enter, exit, take profits. And he couldn't tell John Novak where these areas were, because that's a breach of contract and you can't do that. So what John Novak would do every morning is he would call his friend and he would say, hey, here's my key areas based on the algorithm. How did I do? And it was when daily he found himself within 25 cents. When daily he found that his areas were lining up almost exactly with the institutional traders, that's when Nexgen became available to the public, because he refuses to put anything out that isn't exactly where it needs to be. And guys, you've just got the advantage of all of his hard work. You've got the advantage of a methodology that's been proven. You've got the advantage of live feedback as you learn it. All you have to do is learn it. And John will tell anybody, go find something better. If you do, he'll buy it. And I'll tell you, he's bought a lot of stuff. He still trades Nexgen. My plan is still Nexgen, guys. So I hope that didn't go too much on a tangent. But Stephen, does that make sense? They don't tell you when to trade. Fibs will very much tell you when not to trade, right? What area needs to break. But it's that little combination. It's that little combination of momentum, of none of those fibs in the way, and then defining that entry area. That's when it's time to trade, when the rules are met. That's why all I do is teach rules, and I refuse to tell you when to enter the market. Right now, I'm starting to get the separation between the small and the large. This is the beginning, right? So this fib, once my trigger lines get above it, this fib is no longer a concern to me. Until I reach this fib, I'm good, which means if I get a pullback right now to an area inside of those triggers, I'm going to take a long trade because I have momentum. I haven't reached the next area. I've cleared the previous area, and all I need is them to pull back right to an area inside of favorable large triggers. And again, they don't tell you that the rules are met, but your rules revolve around using these as potential bounce points. You'll tell you that your rules are met. And that's one of the things is so many people go out and, well, I'm going to buy signals. I'm going to buy a signal that tells me to enter. I'm going to buy a signal that tells me to exit. And guys, I haven't found anybody with a world of success with just a signal that says, hey, go long. But what we do is we teach you to recognize momentum. We show you exactly where the problems are. And we teach you how to find opportunities with that momentum in between the problem areas. Just taking a little chunk, because this market trades billions every hour. All I have to do is find my little piece of the pie. And again, today is FOMC day, and FOMC day is a lot of indecision while everybody waits for the feds. So I teach you how to read your indicators, In the beginning, I give you a very followable plan, and I help you with execution, and that's my goal. And the biggest lesson that I like to give is you're not in charge. This guy is. We haven't brought him back in a while. This is Norbert. Norbert is the institutional traders. Norbert is the big money. Norbert is the large crowd. He creates momentum. He reacts at those areas. Every hour in the futures markets, billions are traded. Trillions a day is exchanged in the futures market, Stephen. Our job is just take advantage of the hard work that he does. That's what the high probability trend trade does. Watch this. How much is traded daily in futures? Reach upwards of 100 billion in the futures markets. Some days trillions. It takes $400, Stephen. It takes $400 a day during the trading year for a six-figure income from your trading. You don't have to be in every move. You don't have to be the first person in holding that an area holds. You don't have to be the last person in hoping that that area would break. You have an amazing plan designed to help you capitalize on the moves within the moves. This area has the potential to break, and it came right back to the mid-band, right at the bottom of those triggers before it went back up. That's what we teach every day. The only thing that Nexgen doesn't provide is experience. The only thing I can't do is give you the drive to do the work to get good at it. And it's a little bit of work. It's not a lot of work. It's fun work. It's happy work, I think. I enjoy the hell out of it personally. I take a lot of pictures and I annotate a lot of charts and I study a lot of patterns. And all the effort I put into it comes back to you guys in this classroom. Look at that. When they broke out of their range, they went right to the fib. And look at this. Remember when I said, keep selling the mid-band till it doesn't work? Guess what? It worked that time. And here's a good one. Look at this. So, Stephen, all the triggers get below support. Blue Pearl, all the triggers get below. Look where they pulled back to continue. They pulled right back to that key number. And that's where they headed down. And it just happened to line up with a mid-band and a fib over here. This is freaking amazing to me. And I'm not that easy to impress. That's it for you today, Ron. You waited for him to get above and took that momentum. I like it. 8 seconds. It's the rodeo trade. It trended down. Yeah, so let's talk about what it did. Everything says down. And we're in what's called a strong trending market at this point, Stephen. When the market goes 30 bars in the same direction, there's not a reversal bar, that's a strong trend to the downside. That is all of the sellers killing it to the downside. So the rules are a little different. This mid-band, this moving average on a small chart, is one of the most likely spots for a bounce down. So you could sell it and go down with that strong trending market. And the fact that this mid-band lines up perfectly with Fibonacci resistance, because the recipe for an area that may stop the market is price reaches the area, all the triggers remain below, this area is likely to stop the market. That's the same area. And sure enough, it stopped the market. That's using Fibonacci to your advantage. You know that you have a downtrend because the background is red. You know it's strong trending to the downside because it's 30 bars. You know that the triggers are down. You know that everything says down. You just need to figure out where this little push up is most likely to stop. Doesn't it make sense that it's most likely to stop at a termination condition? And these are the things when you start piecing it together. That's not a high probability trend trade. This is kind of that next trend trade that you'll find yourself taking because it's got a little difference in the rules. The one thing that's going to frustrate most people in the beginning is doing nothing. And it's crazy. If I were going to take this trade because of the strong trending market, I would right click and I would activate a limit order just below that mid band. Here, watch. We're still strong trending. I would activate a limit order just below that mid band. And I would just keep selling it until it stopped working. And Stephen, it will stop working. Eventually, strong trends end. But until it does, I'm going to keep trying to make money. And I'll probably give that maybe $100 worth of risk, 10 ticks worth of risk. Because if it blows through it, I don't want to be in it. But that's exactly how I would do it. I would have a limit order waiting for it on the way up. So when this market was right here and gave me that reversal bar, I would have put my limit order right there. And I would have waited for all of those bars until it came up and hit me, and then I'm in the market, then I'm in the trade. And it overruns a little, and then it heads down, and now we're getting that exact same push look. So if I want to sell the mid band, I just put my limit order just below the mid band, and we'll see if these guys have it in them to push up. Does that make sense? But I have to say, this is not a high probability trend trade. This is trying to take advantage of a strong trending market. See the magenta line right there? That's your mid band. So Stephen, one of the things that's going to help you out a little bit is, let me give the link one more time. Why can it not be reached? Maybe they're doing maintenance on the site. Go to the page. Let me find it again because I did drop it in the room already. Here is the link that takes you to the introduction to all of the indicators. So if you go through there, it'll give you that knowledge base. It'll give you that, this is what I'm looking at. Oops, that was the wrong one. Shoot. Almost got it. But you guys can see it's pulling back to the mid band right now. And I don't know if they're going to give me an entry. They might. They might not. There's no telling. I'll never be in control of that. But in a strong trending market, I'm going to keep, here we go. I'm going to keep selling that mid band until it stops working. There it is. There's the link to the indicators. 42. Maybe I'll give it $100 because I'm on the wrong side of the triggers. And it might pull up to resistance, and it might go to the other resistance, and it might go to the mid band. But in an established strong trending market, I'll keep selling the mid band until it stops working. And it will stop working. There will be a time where that mid band doesn't continue the market down anymore. And Stephen, this is a short trade. So we got in with the anticipation that the market will continue down. Based on the trend, based on the strength of the trend, based on it coming off of that mid band. Does that make sense? The problem when you take a trade outside of the trigger lines is that you don't have a trigger line to put your stop 4 or 5 ticks behind. So I don't know where it's going to stop. I have to decide what I'm willing to risk on this trade. For me, what did you say? The mid-band, it's not inside of the triggers. So I don't know. The mid-band not continuing. All the mid-band is a moving average. So as the market trends down, so does the mid-band. And when you find yourself in one of those strong trending markets, you'll find that mid-band holds on the way down. And that's maybe what I was saying there. Throw your observation in, Rob. It's okay. And guys, this is not a high probability trend trade. This is trying to take advantage of a strong trending market. I have all the minutes in the world, Rob. Throw your observation in. And really what you're doing when you're trading a strong trend is you're betting that they want to get to the next fib. That's all it is. But I don't have the advantage of momentum, really. I do have a clear path, and I don't have areas inside of triggers. Hard bottom with divergence, good place for the counter trend. White bar really shouldn't work trade. Caught the downside of the 1 year in. Oh, right on. Well, hopefully it doesn't make that reversal bar. Hopefully that Fibonacci resistance, when price reaches it and all the triggers are below, is enough to stop it. But it's not. Not a high probability trend trade, ladies and gentlemen. So Stephen, both charts have mid-bands unique to them. But this is why once you get in at a mid-band and it's not inside of triggers, you don't have any place to put your stop. Because the way I teach stops every morning is 5 ticks. That's why this isn't high probability. I don't have areas inside of those triggers. And you just don't know. That's why trading with advantages is so important. Take care, Ron. We'll see you on Friday. So I do nothing, Stephen. So a little insight. I woke up this morning at 4:45 Central, which would have been 4:45 on my charts because my charts are on Eastern. This trade at 6:19 Central, almost an hour and 40 minutes into my day, that was my first trade. That was my only trade. That was $450 in about 3 minutes. I did absolutely nothing before that. I did absolutely nothing after that until class started at 8 a.m. Central. You need to talk to Jason. Your Nexgen keeps crashing. Man, Chris T, one of the things is if you have a workspace, is it the same workspace that's open when you keep crashing? A lot of the times there's something corrupt in that. ES is what kills me. Dude, delete it. Just build a new one. You want to see the easiest way to do that? Let me give you a trick. Okay, so this is my crude oil, right? I've got 2 charts, Chris. I'm going to do this. I'm going to go to the drop-down menu, and I'm going to put it on ES, and I'm going to go to the drop-down menu, and I'm going to put it on ES. In my workspaces, it still thinks that this is a crude oil chart, even though I changed it to ES, because that's the name of it. So what I need to do is click Save As, and then I'll just save that as my ES chart. And I can't do it because obviously my ES is open. And then what happens is your ES will be open, this one, and then you just go back and open up crude oil. And now you've got a brand new without all the corruption that was in the other ES. Does that make sense? So now that I've got that, I would just save this one as ES, and then when I would close this, and I just wouldn't save it, so it comes back as crude oil. That's the easiest way I've found to do it. And anytime it's the same chart that continually crashes, there's something corrupt in there. There's something going on in there. How do we like the termination condition, guys? Triggers didn't break through the one-to-ones. But that one went right to the mid-band inside and right up to it. Pretty awesome. I think that's it for me today. Whew. Great first class. Remember, ladies and gentlemen, if you're brand new, don't be alarmed. We're going to do the same thing tomorrow. You're drinking from a fire hose, but it gets easier every time. Blue Pearl, KRC. Who else is in here that's new? How'd we do today? Hopefully a little clarity on some things. NYC Pug. A little better today than it was yesterday. I promise you guys, every day it gets better. Every day there's a little more clarity. Every day. One step better every day. 1% better every day. And Stephen, you're on day one. It's going to get better every day. And it's great to learn the basics, Nanda. I think it's important to come back and revisit the basics. Because the basics are the foundation. That's all it is. The basics, I mean, they set the foundation for everything you're going to do with the software moving on. And once you commit to learning it, once you commit to participating in this room, guys, there's nothing that you can't do. I very arrogantly told my wife yesterday, I said, anybody that posts 30 pictures in my room will know with no uncertainty that they're capable of doing this by that 30th picture, probably by the 5th picture. And anything that you struggle with, we'll find a solution. So, guys, that's it. Again, the markets are closed tomorrow, but I am going to come in and do a 101 class. We're going to do everything for the new users tomorrow. Feel free to bring pictures. Hey, Rob, I told you, start typing. I'll wait for you. What you got? Don't feel like you gotta hurry. We are good. Guys, for the rest of you, I'll be back tomorrow morning at 9 a.m. Is one-on-one as this classroom is? Absolutely, Steve. Every time you post a question, it's one-on-one training in this room. I typically don't do private sessions because what I've found is that in the history of me doing private sessions, nobody ever shows up prepared. And it just turns into exactly what we do in this classroom. But tomorrow morning I'll be back, 9 a.m. Eastern, and we'll do it again. So if you're going through materials tonight and you have questions, write those down and bring them to the room tomorrow. Without an active market, we're going to have nothing but time to get you any answers that you need. Cool? And guys, one of the things you'll find new users is that sometimes I'll tell you, don't worry about that. You don't need that yet. Seems like you get stopped out just short of your take profit. Rob, that doesn't tell me. You're welcome, Stephen. That doesn't tell me what you're using for targets. It doesn't tell me if it's a number, if it's a line, if you have exit conditions. I love that you're up money. So maybe you have to redefine profit targets. Yeah, but what if 150? So Rob, let's do this real quick. let's say hypothetically, I'm in a short trade from right here, okay? And Rob, what if $150 is right here? Does it make sense to hope stuff breaks because my number is 150? Or is it okay to get out at 135 and get paid at trouble? Does that make sense? I know you guys say, well, I have a 12-tick stop. Well, what if 12 ticks is right in the middle of where things may go? Doesn't it make sense to change that? Doesn't it make sense to use this amazing advantage that you have? So, Rob, if you keep hitting $130, use lines. Guys, that's why we have these lines. Where the market is likely to go. Numbers are nothing. Numbers are man-made. Numbers were designed for trading cattle, right? It's just a number. The market doesn't know that you have a $150 profit target, but the market knows that Fibonacci resistance can stop forward progress. So, Rob, look at where your targets are. Let's just say I'm long, right? And my first target is, it generates above that fib. Well, I don't want to do that. I want to get paid before that fib, before that trouble. So you think that you can predict what the market's going to do. And you say, well, it's strong, so it has to break the fib, right? The difference between you and I, Rob, is I say I have no freaking idea what the market's going to do. I better get paid before I hit something that could create a bounce. I don't know if it's going to go up. I don't know if it's going to go down. But I sure as hell know where trouble is. I'm going to get paid before trouble and not be so arrogant to believe that the market has to get through it. If you're not in profit coming into the fib, then you didn't leave yourself any room. I get what you're saying. And it depends on the trade too, right, Rob? So if you just jumped into a trade all willy-nilly, it makes sense to get paid a little quicker. 150 might be kind of big for just jumping into trades. I know you like that momentum trade. Most of the people that just jump in are looking for $110 per contract. I'm not telling you what to do, but I'm telling you if the people that are successful with these trades aren't looking for 150, maybe scale back until you start to get some point of reference for when it's okay to hold for bigger moves. And that's the cool thing. And then I'm going to say what I say to everybody. You're not showing me any of your trades. You're not showing me your entries or your exits. You're not showing me your large chart. So I'm just flapping my gums arbitrarily right now. Without seeing that point of reference, it's difficult for me to help you beyond just saying some things that I know. So, guys, that's it for me. I hope you have an amazing afternoon. 2 p.m. Eastern, FOMC. I won't even be at my computer. I'll be out doing something else. You guys have an amazing afternoon. I really do appreciate you being here. You guys take care. Be good. I'll see you in the morning. You're welcome, Stephen. You're welcome, Erla. You're welcome, Erla. Have a good one.